focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are off by more than 1% across the major indexes. You can see the S&P and the NASDAQ down the most. Tech stocks, the biggest ones, are dragging us. Here at the New York Stock Exchange, you can see Onity ringing the starting bell. Over at the NASDAQ, we see Shoulder Check, which is kind of like a hockey playing mental health organization. In terms of the major averages, we can expect to see a real reversal from yesterday's records. Let's get over to Katie Greifeld to see where the trade is landing.
Yeah,
Katie?
Matt, it doesn't matter if you are big or you're small, you're down today. You take a look at the S&P 500, currently off by 1%. The NASDAQ 100 sort of flirting there. Now you can see we are solidly down 1.7% lower on the NASDAQ 100. And small caps, of course, we've been talking about the great rotation all week, taking a bit of a breather right now. Russell 2000 down about 0.9%. But one stock specifically to keep an eye on is Johnson & Johnson, out with their second quarter results. And while profit beat expectations, the company did cut its full year forecast to account for a number of recent acquisitions. And we'll get more on those results next hour when we speak to Johnson & Johnson CFO Joe Wolk.
Katie, I'm also keeping an eye on Synchrony Financial, down almost 3% as the market opens. It reported that second quarter had met the average analyst estimate, but remember, you are still watching, investors watch these financials closely. Net interest income kind of shy of expectations. Same with deposits. We'll see how the rest of the season goes.
All right, and NVIDIA is down alongside other chip makers. We've been talking about this morning. The Biden administration said it's considering its most severe trade restrictions yet on China's chips access. Let's take a closer look at the chip makers with Abigail Doolittle. Abby?
Well, Matt, we do certainly have stocks under pressure, and a lot of it does have to do with the chips, but also big tech. I would argue that there are three things going on. These are the four most valuable companies in the world. You can see that they're all down 1% or more. The chip stocks down the most for that very reason that you were just talking about, the Biden administration threatening greater crackdown on Chinese chips. But I would say that there's something else going on here, because you have Apple and Microsoft lower. Yes, clearly there could be a read-through to the chip situation, but you also have what may be emerging as the Vance trade, because J.D. Vance has been very vocal in terms of saying that he supports some sort of crackdown on big tech. It started yesterday. It seems to be bleeding through today. And then third, well, we have a massive rally in the NASDAQ 100. If we go into the Bloomberg terminal, this index over the last 5 years or so, 4 years out of the pandemic lows, up, you can see at the pandemic lows, this is actually the 2023 uptrend, but out of the pandemic lows, up more than 200%, going from 7,000 to above 20,000. That's really incredible. But over the last year or so, or few months, I should say, not really hanging on to this trend. The RSI, the momentum is weakening, suggesting that we could see some sort of healthy consolidation given that big rally. But there is one one big exception here, Katie. Let's take a quick look at Intel. The last time I saw these shares, they were up about 5%. Actually, now they're up about 7%. I was looking at the tape. I did not see an obvious reason. Maybe you all know, but they, of course, are planning on some sort of expansion here in the U.S. more. So perhaps that has a piece to do with it, or maybe there's something on the tape now.
Yeah, maybe there's a pair trade going on there. Sell NVIDIA, buy Intel. We'll continue to keep an eye on that one. Our thanks to Abigail Doolittle. And joining us now is Matt Perrone. He is Janice Henderson, Global Head of Solutions. And let's start, of course, with big tech, particularly what we're seeing in the chip makers. And today is a nice reminder that when it comes to chips, it's really bipartisan, sort of the focus on China right now. Of course, we have the Biden administration reportedly threatening tougher curbs. You have Donald Trump, of course, talking about Taiwan. And then you think about just how important some of these big names are when it comes to the makeup of the indexes. How vulnerable does that make this market?
Hi, Katie. Good to be with you. Yeah, I think there's, look, they've been very extended and they're ripe for a correction or a pullback and some consolidation, I think, as the term you used earlier. I think that makes sense. We are thinking that a broadening out of the market probably makes sense as well here. So there are a number of cross currents, a number of factors that could cause this rotation. We think eventually they'll find their footing. They'll grow into, valuations, which recently have expanded somewhat. So we're not worried about the fundamentals. Obviously, this is a good time to take some profits and rotate into other areas. I think that's sort of a short-term dynamic.
Do you need rate cuts? I mean, we're talking today about Waller and Barkin and monitoring everything any Fed speaker says. Do you need them to cut in September? Do you need them to cut 2 or 3 times this year?
Need is a strong word, but that's
I mean for the rotation, Matt. I mean for this trade to work out that, smaller caps can finally rebound.
Yeah, I think for the smaller caps, that's probably true. If there was some backing away from rate cuts, that would be a problem for smaller caps. I think that is the big story driving the rotation, so to speak, especially into the smaller names. That said, as we said in our mid-year outlook a few weeks ago, we think this is a good time for careful risk-taking and broadening out in equities. So we've added to mid-caps, which you like a little bit better than small caps. We've added to non-U.S. equities just because we do think that the moderating growth, the rate cuts will allow a more broadening of the market. So this is kind of consistent with our view that we will be seeing more participation from different parts of the market.
I also want to bring in some headlines here. Federal Reserve Governor Christopher Waller saying the economy is getting closer to a point where the Fed can reduce borrowing costs, but he'd like to see more evidence that inflation is on a sustained downward path. When you think about the thinking coming out of the Fed, Matt, how much uncertainty is there around not anymore the timing of rate cuts, but the number of them?
Yeah, I think that'll be the next question the market has. How many cuts are we going to get? What's the pace and the path of policy rates? I think that's going to be, kicked around quite a bit in the market and will cause some volatility in the market. And we're sort of expecting that. We've been in melt-up mode for some time now. And I think we'll alternate between, inflation not coming down fast enough. Then we'll have growth scares, which will cause volatility. So, buckle up a little bit. We think it'll be bumpy, but still we like the backdrop for risk in general, just given the fact that now we're officially on the rate cutting path. And we don't know the trajectory exactly, but we're in a new regime in that regard.
A lot to look forward to there, of course, when it comes to growth scares and some of the bumps that you just laid out there. But, of course, we're talking about rate cuts as we're really heading into the heart of earnings season. And I mean, when you think shorter term, the next couple months, what do you see as the real driver? Is it going to be that rate cutting story, or are we going to be talking about corporate fundamentals here?
Well, I hope we're talking about corporate fundamentals. We think the story there will be pretty positive, right? We've had strong earnings growth out of the tech cohort. That's been the dominant story. When you look forward, that there's a catch-up happening in earnings that we see, but that'll close the gap. And again, that's positive for the market backdrop. So we're excited about that possibility that we'll see more participation more broadly from the markets due to the fundamentals. But of course, we're also coming into election season, so it's going to be interesting.
How important is election season? I mean, so much talk about J.D. Vance and, the sort of unique Republican take that he has in terms of fighting big tech. On the other hand, we did see Trump doing a lot of that when he was in office last as well. So does that matter to you, that kind of theme in terms of your investing?
So, we generally don't invest on politics, although we'll look at policies that are enacted and how they will impact us. So it's possible that some of these policies on both, regardless of administration, will have distortions at the sector level. That's true. We don't see it broadly in the market as being a durable theme. Typically, you get some pressure, a lot of volatility into an election, and then typically there's a rally out on the other side, regardless of party that wins. So we do think we'll get through. That's more of a short-term dynamic.
Matt, we thank you for joining us. That is, of course, Matt Perrone of Janus Henderson. Now, coming up, regional banks on the biggest winning streak in 4 years. We're going to dive deeper into the sector next. Stick with us. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg Open Interest. Quick check on the major indexes here. The S&P 500 down 1% after hitting another record high yesterday. It's 38th high this year. The NASDAQ is down more, 1.8%, as we see, especially the big mega cap tech stocks falling. Nvidia, for example, and other chip makers are off. And the Russell 2000 is down less than the big cap indexes, as we saw yesterday, a real rotation underway into small caps, and to some extent that continues, I guess, lessening the blow on the Russell. Katie?
All right, it's time now for top calls. Some of the analyst action in focus this morning. And first up, TD Cowen cutting Spirit Airlines to a sell. The firm says that it doesn't see the airline posting profit until the summer of 2026. And now that downgrade is coming as the discount airline warned of lower second quarter revenues. TD Cowen also cut American Airlines to a hold as well. Next up, we have Bank of America raising its price target on Alphabet to $206, also keeping a buy rating on those shares. The analyst says that earnings for the tech giant will set a positive backdrop for the group thanks to its AI integrations. Remember, Alphabet reports its second quarter results next week. And finally, Oppenheimer cutting its recommendation on Morgan Stanley to market perform. The analyst says that the bank's second quarter results were, quote, very solid, but the stock's rally has outstripped his price target. Shonali.
And we're going to stick with financials because regional bank earnings are starting to come in. Citizens and U.S. Bancorp out with results today. Regional and mid-sized banks as a group are up more than 12% recently thanks to growing optimism for those Fed rate cuts. We're going to break it all down with Herman Chan, the U.S. regional banks analyst for Bloomberg Intelligence. And it's interesting because you did see the KBW Bank Index rise the last 3 days. It's actually now outpacing the S&P 500. Pour one out for the banks, but you are seeing a lot of divergence. For example, First Horizons today coming out, now really falling into the early trade. How do you think about where there might be some sore spots given the rally that we've seen?
Yeah, that's right. So if you just take a step back with large bank earnings earlier in the week and last week, JP Morgan and Bank of America talked about a positive earnings trajectory and with respect to net interest income. PNC confirmed that yesterday, and we saw a little bit of that from U.S. Bank today. On the other hand, there's been some divergence, as you mentioned before, with First Horizon reducing their outlook for net interest income for the full year. So it's going to be some mixed trends with regional banks, it seems like.
Do you have any input from politics when you look at your models, right? Do you think about how a Trump-Vance ticket might affect the banks, even though you're not representing or studying the big banks, you're looking at regionals?
Yeah, so a lot of the enthusiasm for bank stocks also hinges on a potential Trump presidency. Really, that's focused on lesser regulation on regional banks. There could be more tiered regulation that the prior Trump administration had with the Fed, and there could be more M&A activity. One of the things that's really hampering higher deal activity within bank M&A is that the Biden administration has been pretty reticent on approving deals. So in a potential Trump administration, you could see more tie-ups.
That's what I've been wondering, because I remember coming out of March 2023, the idea was that we'd see a lot more consolidation in the industry. We haven't really seen that regulation being a big part of it. If some of those hurdles were to be removed, I mean, how much M&A could we be talking about here?
Yeah, we're still at pretty lows. Really, what's been hindering it is that there was one deal, the First Horizon TD deal was not approved by the Fed, and then there's been two factors, right? The Biden administration and also higher interest rates. So those two headwinds could actually go away in the next few quarters, and you could see some pickup in activity. Really, the industry is looking at the Discover Capital One deal. If that gets approved, then you could see some more opening of.
We do have, though, still more than 4,700 banks in this country, right? I mean,
Right. I mean, they could definitely merge.
it's pretty fragmented compared to other countries.
And, you know, to the point that he's making also, there is been a lot of uncertainty around those deals. Maybe this lifts the cap. There's actually something else. When we think about rent, actually, the Biden administration's potential rules around rent caps, I'm wondering how that might impact things, because you saw New York Community Bank take a massive hit based on this issue in New York. Could that be more widespread if this is going to take effect?
That remains to be seen if it's really going to be fleshed out. It isn't really on the radar screen yet, but it has, as you mentioned, really affected what's happened with the properties, the multifamily properties that New York Community is highly exposed to, and that's really one of the reasons why we had some hiccups with the stock earlier in the year.
And I mean, just zooming out, you know better than most people that the broader audience talks about regional banks much more than they did just a couple years ago. And a lot of that comes back to concerns of, is there another shoe to drop, particularly when it comes to CRE? So just to really wrap this all together, is there another shoe to drop? Are we out of the woods?
Right now, we've had so many quarters of the banks understanding the potential risk of commercial real estate. Every quarter, quarter by quarter, the banks are adding to their reserves, specifically with office commercial real estate. And if Fed rate cuts actually do happen, that's positive for credit quality, because your borrowers can support these potential problem properties a bit better with lower borrowing costs.
Herman, we thank you so much for joining us, of course, at the middle of a very busy regional bank earnings season, start of all earnings seasons, though. Now, coming up, we're going to talk about the new CEOs appointed at HSBC and Warburg Pincus. We're going to discuss that and more in the Wall Street Beat. A lot of change at the top. This is Bloomberg.
This is Bloomberg.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
We continue to invest along three dimensions. Technology, Jim DeMar and the team run it, and they've done a great job. And so 5-7 years ago, we made the decision to give them more capabilities. Technology, the balance sheet that they can use to help their customers achieve their goals, and talent. And so Jimmy across the board continues to increase. And so we feel good about it. He made $1.4 billion after tax this quarter, which is a very strong earnings quarter. But what's happening is you're seeing back-to-back $1 billion-plus quarters. Where it used to be $1 billion plus and dropped to 500 when the market slowed down. You're seeing much more stability.
That was Bank of America CEO Brian Moynihan speaking on Bloomberg yesterday. The bank has put more money and balance sheet resources behind its trading business. Remember, over at Morgan Stanley as well, the CEO is saying we are back when it comes to equities trading. We're going to turn now to some other top finance stories in today's Wall Street Beat. First up, HSBC has named Georges El-Hedri CEO to replace Noel Quinn, adhering to the practice of promoting insiders to turn the bank around, to run that bank. He takes the role less than 2 years, though, after his promotion to CFO. And next up, Nomura reshuffling its Asia investment banking team, cutting jobs, trying to reduce costs amid a deals slump in China and Hong Kong. And I've got to say, that is something that people here are worried about as well if this continues in the United States. And finally, we're going to talk about Warburg Pincus naming Jeffrey Perlman CEO, succeeding Chip Kay, who will become chairman of Warburg Pincus alongside Tim Geithner.
Geithner?
Yes, if you remember that he worked there.
Yeah. No, very cool. I mean, actually both, because Warburg Pincus, back when I started in this industry, was just a massive name in finance. And obviously Tim Geithner, throughout the great financial crisis, was someone we talked about literally every single day.
Well, it's also interesting, too. You think about how long this company has been around, 58 years. This is just the third leadership transition in its history. So it really speaks to this is a company that has a lot of stability at the top. And obviously, this was not a decision that was made lightly.
Yeah, and it's interesting, fun little fact too, the former comms chief at Goldman, now also working at Warburg Pincus as well, so there is a lot of well-known heft entering those ranks. I've got to say, in the private equity universe, it has been tough to make transitions, but to your point here, just this is the third leadership transition, not that many of them, but certainly new names rising to the top of Wall Street.
So many changes at the top. What do we know this far into reporting season? I know for regional banks we're just starting, but we've got a lot of the big names about the rank and file employees, about, head count in terms of contraction or growth.
I'm glad you asked. Bank of America, for example, saying that without the temporary stats that they have this summer, headcount might have been flat to down. For example, at Goldman, it is flat. And we were talking about Nomura, for example. I've had messages from different investment bankers saying, they wonder if there needs to be another round of job cuts because a lot of that deal boom has not come to fruition, at least in the way that people had wanted. And you look at that story out from Deutsche Bank yesterday, this idea that they want rainmakers to focus not on the number of deals, not just many, many, many deals, but the more profitable ones. And so they're trying to make more money with less people.
All right. I mean, good luck to them. I think that a lot of people in a lot of different industries are trying to figure that out as well, of course.
Not to mention AI, right?
Yeah.
Because that could be a game changer, especially for banks and law firms.
Yeah, definitely. Let's take a look at these
Katie's
markets,
eager to get some markets.
Katie's
like, let's get to the markets.
I want to take a look at the stocks.
The S&P 500 currently off by about 0.8%. I mean, we were coming off of a really rip-roaring rally, so I think, of course, it is important. You think about some of the biggest names out there. NVIDIA, for example, down quite significantly on geopolitical risk, and you can really see that expressed in the NASDAQ 100, off by almost 2%. And then you take a look at the small caps. Look at that. Those are your biggest winners, the little guys.
Yeah, the Russell 2000 actually up. The Dow Jones Industrial Average gaining as well.
Just 30 stocks.
Because, yes, but very big ones, right? So you see gains in healthcare insurers. United Health Group is up. Travelers is up. Johnson & Johnson is one of the biggest point additions on the on the Dow Jones Industrial.
I rag on the Dow, but if you're looking for diversity within an index, you're going to find it.
Can I add one to the alphabet soup? I want to look at the stocks, too. The Philadelphia Semiconductor Index now down 25 out of the 30 stocks in it down on the day based on that worry about the curbs on China as well. So we were talking about NVIDIA, but the broader index also down, of course, after a 34% rally year to date.
All right, let's get to the trading diary, what you need to be watching this week. Bloomberg continues special coverage on the ground in Milwaukee for the Republican National Convention. And we get oil inventories in about 30 minutes, so watch crude. This afternoon, we get the Fed's beige book data, adding to the guessing game about when we're going to get the first cut. Tomorrow, we get the European Central Bank decision, so if you're focused in on ECB rates, we'll give them to you. And on Friday, we'll get earnings from a number of companies, including American Express and American Airlines. Coming up in the next hour, we're going to talk to Johnson & Johnson's CFO and give you the latest on JCPenney's turnaround with the CEO.
look at the number of women that want to learn the game, young girls that are joining on the tee, really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? The whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
DOJ or other authorities
could face bigger challenges.
was next. Was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Brokers Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Coming up, we're going to get the latest from Milwaukee. The RNC, Jody Schneider, political news director for Bloomberg TV and Radio, is going to join us in just a moment. Edna Current, Bloomberg, a global economy reporter, on the U.S. floating tougher trade curbs and chip crackdown on China. That's certainly impacting the tech stocks today, and we'll break that down. And Sarah Ponchek, a financial advisor at UBS Private Wealth Manager, is going to join us and give her thoughts on these markets. We got a busy hour coming up here on Bloomberg Intelligence. Let's kick it off with Lisa Mateo and get a Bloomberg Business Flash. Lisa.
You got it. We've kind of got this mixed vibe on Wall Street. Still some worries over tougher U.S. restrictions on global chip sales to China. Right now we have the NASDAQ down nearly 2%, the S&P 500 down about 1%, and the Dow is up 0.2%. Now that news about those trading curbs has shares of ASML holding lower. Those ADRs down 10%, even after the company reported strong orders in the second quarter. On that same page, I also want to check in with NVIDIA, down 5%, same for Broadcom, and you have AMD down 6%. Some more economic data out this morning. U.S. home construction, that picked up in June, and that was thanks to a gain in multifamily projects. Housing starts, they increased 3% to a 1.35 million annualized rate last month. The prior month revised up. Building permits rose 3.4%. And industrial production for June, survey was for 0.3%, came in at 0.6%, but still lower than the previous month. Over to the two-year yield, 4.47%. That's up 4 basis points, and the yield on the 10-year, 4.18%. That's up 2 basis points. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa Mateo, Alex Steele, alongside Paul Sweeney. Happy Hump Day. Happy middle of the week day.
Yep.
Ben Emmons had the great statement today that basically the market's dealing with a hangover.
Okay.
Like we had a
like
huge move.
Yesterday, we saw the rotation kind of out of tech into small caps. Small caps are up a bit today, but maybe we're in the hangover phase. That kind of put it in perspective for me a little bit.
Yeah, exactly. And it's, healthy pullback.
Yeah.
It's another one of those things.
Exactly. All right, let's get to Carmen Reinecke from Bloomberg News. She joins us now with some stocks to watch. And one that I had to actually look up, GitLab. What is this company? Why is the stock up? What is happening?
Yeah, so it's sort of, this is a company that I would associate really with coders. It's sort of a software company. It's where people are, putting in their code, uploading it, internet stuff, right? So GitLab, GTLB is the ticker there. It's up about 9% right now. This is the biggest jump since June 26th. Basically, it's eyeing a sale. Reuters reported that. This is a Google-backed software company, and some of the potential buyers include peers such as Datadog, and shares of Datadog are also down a little bit. They opened about 6% lower. Let's see where they are. They're, about 6% lower right now. That's ticker DDOG. Bloomberg Intelligence said that a potential Datadog and GitLab tie-up actually could be problematic, especially with Alphabet involved. Of course, they also just this week were said to be in talks to buy a cybersecurity company called Wiz. So just some interesting M&A going on here, potential M&A, and moving these stock prices around this morning.
And also you're looking at, this one I don't know, Cassava? Am I saying that right? Cassava?
Cassava
Sciences. What is this puppy?
Yeah, so this is a company that's working to develop a drug for Alzheimer's disease, and it's been under pressure. So shares of this, it's ticker SAVA, they're down 30% right now. This is adding to a really significant slump. It was down already 40% this year. There's just clearly some things going on at this company. The CEO, Remy Barbier, has resigned as president and CEO.
Wow.
Also, the SVP, Lindsay Burns, is stepping down for her role. A former advisor was indicted in June. So just thought it was an interesting one to point out. Shares are really beaten up. This is a pretty big move for any stock. And,
anytime your chairman, president, CEO, and founder resigns, something's up.
Super
there you go.
significant.
If you're a shareholder, you're like,
Yep.
I'm not going to wait around and see what's going on here.
Exactly.
What else are you watching?
Yeah, so the last one that I was looking at, a little bit of an earnings story today, and also, another CEO move. Shares of Five Below are down 17% right now. This is on track to be the biggest drop if it closes at this level since 2020. So pre-pandemic here, it's down. It's lost almost $1 billion in market cap. The discount retailer cut second quarter earnings per share guidance and also announced that its CEO, Joel Anderson, would step down. There have been multiple downgrades from Wall Street analysts covering the company, including Morgan Stanley, Truist Securities, and William Blair. Morgan Stanley analyst is saying that this adds uncertainty and earnings risk, and that there will probably be under new management, heightened investments to reinvigorate sales to remedy shrink. So not looking so good. Discount retailers have also just been really beat up, I think, in the current sort of uncertain economic backdrop. So just seeing extra pressure here for investors at Five Below.
All right, thanks, Carmen. We really appreciate it. Carmen Reinecke joining us from Bloomberg News, going through some of the movers, application software, you got a biotech, you got a retail.
How about,
we do it all for you.
You know what happens this time of the quarter all the time?
Yep.
Big banks report numbers. Literally the next day, they hit the bond market to go sharp down.
Yeah.
Morgan Stanley, latest big Wall Street bank to tap the U.S. investment grade market today after reporting earnings. So strong demand out there. Makes sense. They do it all the time.
Hit a record high yesterday in the equity market. So, so there is that. Okay, let's get to the politics. So first of all, I want to encourage everyone to read Bloomberg Business Week's interview with President Trump. It is a tremendous piece of journalism. It is really helpful if you're trying to understand Trumponomics in a clear, concise way. They do an amazing job of filtering all of that. That's sort of the backdrop. In the immediate world, we're still in the middle of the RNC, Republican National Convention. This is day 3. Joining us now for more is Jody Schneider, political news director for Bloomberg TV and Radio. Jody, what is the theme today?
Today is foreign policy. They're going to look at the world stage. But the most important thing tonight is We're going to hear from the vice presidential nominee, J.D. Vance. And in a way, this is going to be introducing him to a lot of America. Some people know him. They know him from his Hillbilly Elegy book, his story. But he's only been in the U.S. Senate a short time, and so a lot of people don't know him yet. So we're going to be seeing America's going to be getting their first real glimpse for a lot of people of him tonight when he takes the stage.
So I guess Jody, the takeaway from last night was, boy, this Republican Party looks really united. Is it as united as it appears to on the TV screen? We had Nikki Haley up speaking last night, for example.
Yeah, last night was an interesting night from those of us who remember some of these people as being very not so nice about Donald Trump, some of them only a few months ago. Nikki Haley called Donald Trump totally unhinged. We had Marco Rubio and Ted Cruz on the stage who previously didn't have very nice things to say about him, or Ron DeSantis, who said, you know, he was embarrassed about a lot of Republicans who had to kiss the ring of Donald Trump. Well, kissing the ring was what was happening last night. They were all up there talking about how he is the best person to run this country. Nikki Haley, who just a few months ago was still getting pretty good turnout vote counts in the primaries, even after she'd left the race, said last night she was 100% behind Donald Trump. She indicated that they had differences, policy differences. You saw a little smile from Donald Trump sitting in the stands at that one, but she basically was making the case that it's time to come together. Supposedly, she wasn't even supposed to be on the roster of speakers, but after this weekend's shooting in Pennsylvania, apparently they called her and said, we want unity. They're preaching unity. They're saying it's a unity ticket now. They got that last night, at least in terms of all the speaker. Everybody has now come together. The question is, what does unity mean in a larger sense? Does that mean reaching out to Democrats? What does that mean? And the J.D. Vance pick doesn't necessarily seem like a unity pick, given a lot of things that he espouses.
For the polling after this, so usually after a convention, the party who just had the convention, their party gets a nice bump. We also had that potential assassination attempt on Saturday, assassination attempt on Saturday. What do we expect that polling to look like next week now?
Yeah, so you're right, Alex. They do. The party usually gets a bump. You've had a week of kind of free advertising, right? And in this case, kind of coming together. And Donald Trump, that assassination attempt in Pennsylvania will probably help his numbers as well. Whether they can hold on to that is the real question. And the real question in this election is those swing states. The current president, Biden, has been weakened. We know from the debate performance. He hasn't really been able to bring up his numbers since then much, but a lot can happen between now and November. The question is those swing states, who can get those? Pennsylvania is now significantly in play, even though that's where President Biden partly hails from. And the Republicans are going to be going in there and hitting those swing states very, very hard, including in coming weeks.
Jody, I think the shift is now, and maybe some of the attention now, once we get past the Republican convention, it's going to revert back to the Democrats. What's going on there?
Yeah, President Biden got a little break, right, from the speculation this week, given that we're concentrating on the VP pick and what happened over the weekend. But I think there's still a lot of concern in the party. We're seeing polling now suggesting that his numbers are way down. Still a lot of discontent among parts of the party as to whether he can win. But the question is, if it's not him, who is it, and how do they go about that? We did see today that the party plans to have the roll call at the Democratic convention for Joe Biden, going through the roll call. So they're saying at this point, this is all still on. He has made it very clear, including in the Lester Holt interview on Monday night, that he is not leaving the race. So the question is, how do you get him to leave if the party decides they want that? And who else would they put in his place? We've heard that there is polling on Kamala Harris taking place to see how she would do against him. And he even mentioned that at the news conference last week. But at this point, it's really a question of How do you, will he get out? He doesn't seem to want to. And who would be there? And could they win this late in the game?
Jody, we appreciate it. Thank you very much. I know it's incredibly busy for you guys. Jody Schneider, political news director for Bloomberg TV and radio. So just some headlines here for you. ASML shares are halted for volatility after an 11% drop. We're waiting for them. They just started retrading, actually, so they're still down 11%. You also the NASDAQ 100 extending their declines to now over 2%. The S&P is down by over 1%. A big part of this was the Bloomberg report overnight that we could potentially see severe trade restrictions if companies like Tokyo Electron and ASML continue to give China access to advanced semiconductor technology, and that whole situation is weighing on the chip stocks. Enda Curran, Bloomberg global economy reporter, is joining us. Enda, can you walk us through the potential, what the Biden administration is thinking about?
So it's a pretty draconian next step. Essentially what the administration are talking about is making use of something called the Foreign Direct Product Rule. And in essence, that means that gives the US leverage over any kind of technology that includes any kind of US input or material or technology in any way. So it would be a big next step if they were to go down this route and try and put the clampers down on ASML and on Tokyo Electron, like you mentioned. Now, the thing about this is it raises questions in two ways. It's a delicate dance for the US in terms of how it approaches this with allies. It could be diplomatic tension between both Japan and the Netherlands. Companies in the middle of this already say that they've been hit hard enough. And then on the other side, it raises questions about, well, just how effective have the US policies been, because it was back towards late 2022 when the US announced these sweeping measures on chip technology export restrictions to China. Back then, it was expected to be a big deal, and well, clearly it's not necessarily having the impact that they wanted. So it's a potential major step, but raises lots of questions about where this policy is going at the same time.
Realistically, what do you hear from, I guess, the industry about the ability to continue or to try to really make a change in where chips come from, how they're manufactured, the trade flows, onshoring, friendshoring? How realistic is that?
Well, we know there is some shifting of production manufacturing going on of not just the chip chain, but other production chains as well. We know, of course, that the big subsidies that the US have ruled out has attracted a lot of investment in the semiconductor space. So things are moving around, but there's still a lot of reliance, as you say, on some key kind of nodes, and that's and key companies like ASML and like in Taiwan and the like. But the other sort of feeling, I think, among the macroeconomic side of this is that people are kind of on pause now with investment and spending plans until they see where the US election goes in a few months. So, you know, on the one hand, it could either be, broadly speaking, continuity with the current administration, or if it's a change of administration, it could be quite a different approach, maybe even more hawkish. That's what all the signals are. That's what our own interview with former President Trump signals. So there's a lot up in the air here, and I think this kind of potentially big step by the administration so late in the political cycle, I think, is giving people pauses just to ask questions about where is US policy towards China going in the near to medium term.
I mean, of course, it's always hard to understand the stock reaction with these kind of headlines because political hedging has not really worked. And also you have some of these stocks that have had a huge run up anyway. So we have to sort of take that with a grain of salt. Do we understand, though, what more trade restrictions will do to the global economy? I know that President Trump's team says that it's okay because we'll have lower taxes and more consumption, and it's going to be the other countries and companies that will pay for it, not the United States. What do you think? What's your research tell you?
I think people are starting to focus on this now, Alex, in a way that they weren't. I mean, the last few weeks, the political cycle in the US has changed a lot. And I think both in the US and globally now, people are saying, if there is a change of administration, what would it mean for the trade and flow of goods and capital and services? Obviously, US-China is at the center of it. It's red hot. But it's not just US-China. Former President Trump is talking about raising tariffs and driving hard bargains with all trading partners who have a deficit with the US. So it's just cementing this idea of heading for deeper protectionism, maybe deeper mercantilism, certainly less kind of cooperation on the world stage. And then how does that flow through to prices and people at home, consumers? It probably means more expensive production, so more expensive goods to buy, and that's the whole inflationary story. So I think there's a lot of uncertainty about where this is all going, but at the same time, people now are starting to focus hard on it in case of there is a change of administration in a few months in the US.
certainly having an impact on the market. That is for sure. Enda Curran, thank you so much for joining us. Enda Curran is a global economy reporter for Bloomberg News, joining us from Washington, D.C. And as you mentioned, Alex, really having an impact on the market, the S&P off 1%, but the NASDAQ off 2.3%. So that's where you're seeing it. I saw the Van Eck ETF, semiconductor ETF fund lost about 4% of its value today. So kind of across the board. But as you mentioned, Alex, we're coming off of those all-time highs. So the market was certainly looking for a little bit of a reason to pull back. And I think a little bit of political policy uncertainty that's kind of crept into the market. That would be the thing here. Looking at the yields, 10-year Treasury, we're at 4.19%, up 3 basis points here today. And I'll call out Bitcoin. Why not? It's pretty flat here today. 64,850. WTI crude oil, $82, up a little bit. We'll have more coming up. This is
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm Lisa Mateo with your Bloomberg Business Flash, and Market Drivers brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of interest at ibkr.com/RIA. Stocks mixed this morning after the S&P 500 notched a fresh all-time high yesterday. Right now, we'll check in with the S&P 500 down 1%, 57 points at 5,609. The NASDAQ down more than 2%, 412 points at 18,096. We have the Dow up 0.3%, 155 points at 41,108. We head over to the two-year yield, 4.47%. That's up 5 basis points. The yield on the 10-year, 4.19%, and that's up 3 basis points. We have spot gold higher, $2,471 an ounce. We have Brent crude $84 a barrel, WTI crude $82 a barrel. I have to point out currencies. We have the dollar weaker, the Japanese yen stronger, actually extending gains to more than 1% at 156.47 against the dollar. The pound top 130 for the first time in a year. That's on stronger than expected UK inflation. Right now, it's at 130.22 against the dollar. Moving the markets, discount retailer Five Below. Those shares down 21%. The company cut second quarter earnings per share guidance, also said that its CEO will be stepping down. And shares of Google-backed GitLab, they are higher this morning, and they're up about 8%. This is after Reuters said that it's exploring a sale after some interest. That is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are live from the Interactive Broker Studio right here in Midtown Manhattan, which apparently it's only 80 degrees outside. I'm questioning this.
Yeah.
This is weather.com. I was going to make some comparison of how it's hotter here than in Boca Raton, but that whole thing just sort of blew up when I looked at the actual weather. Joining us now for the market take is Sarah Ponzik, a financial advisor at UBS Private Wealth Management, and she's joining us from Boca Raton, Florida. Nice. Sarah, it's so fun to chat with you. So I understand we're seeing a decline in the NASDAQ. I understand the S&P is selling off. I also see that small caps are still holding their own here. Is this really about Trump? Is this really about trade restrictions, or is this the continued rotation?
Well, Alex, really quickly, I can tell you it's hotter here than it is in New York right now. So you can be happy sticking where you're at. But as for the rotation, look, yes, we've seen some political headlines come out. Yes, we are seeing semiconductors sell off, and we're seeing another tech sell off. But to your question, no, I don't think it's solely about headlines that, came out over the last 24 hours. Rather, what we're seeing is a continuation of this rotation that really caught steam, and really we saw fuel added to the fire last week after CPI surprised to the downside for the third straight month. So we're seeing, this changing of the guards within the markets. There's been talk for a while, how long can the Magnificent Seven or large cap tech or semiconductors continue to fuel the way higher? And it seems like last week we did see not only a bend, but a break with a really swift rotation. I mean, you just look at small caps over the last 5 days, up 12%. Meanwhile, the NASDAQ's flat. That just shows you the rotation, right there and then. So now the question becomes, all right, well, is this going to continue?
So what is the thought here, Sarah? Because I think, one of the concerns I'm sure you hear from your clients is that how healthy can it be for this stock market to be anchored by 6, 7, 8 names in terms of the performance year to date? That doesn't sound like a healthy market. How much of a risk is that for you?
Right. We do hear that question all the time. And to give you an idea of just how consolidated the rally has been, if you look at the amount of companies that have outperformed the S&P 500 year to date on an individual basis, it's only 24%. So not even a quarter of companies within the index are outperforming the index, which just shows you how important a few companies have been to really dragging the gains higher. Now, is it a concern? Yes, there's always concern over narrowness in the markets, but at the same time, when we think about why there has been this narrowness in the markets, it's because these, large cap tech companies have been or become the epitome of quality. Investors have been flocking to quality names with high earnings growth over the past year and a half, let's say, and that's what's driven this narrowness in the market. So it hasn't been too large of a concern for us in particular. And we actually are still most preferred on technology, and we still think technology companies have a very important place in a portfolio. But yes, seeing a broadening out, seeing small caps perform, seeing some cyclical areas of the market like industrials start to catch up and perform better as well, that's definitely a well-taken sign. We are glad to see the broadening of the markets. And it's very possible that what you could see then is this, internal rotation of the markets where sure, we might see tech pull back a bit. That's only natural and healthy, given the fact that, let's look at semiconductors, for example, this year. Semiconductors are up about 30% in 2024 alone and up over 50% over the last year. So it would be healthy for us to see a rotation in the markets, see the old guard start to, hold back a little bit. But it's possible we could see the market continue, if you look at the index level, continue to at least move sideways or move higher from here if we see other areas of the market that have underperformed start to outperform going forwards.
Yeah, that was kind of my question. It's like, is it a sell tech, buy small caps, which is sort of the narrative that we were starting to see yesterday? And if we get some impulse where small caps can't sustain this move that we've seen in the last 5 trading days, and tech still sells off, then it feels like we're in for a different kind of sell-off.
Right. And when we think about this rotation that we're seeing, there's really 4 factors that we feel as though need to happen in order for this rotation to continue in a healthy way for the market to continue to move higher. And what those 4 factors are, one, inflation needs to be contained, which per the CPI data we got last week looks like is possible. 2, the Federal Reserve needs to start cutting rates. We've been talking about it for a long time now, but we are as close as we have ever been, and we're finally seeing the whites of the eyes potentially of interest rate cuts, and the market's fully pricing in a cut starting in September and 2 this year, and then continuing into next year. The last 2 factors are probably more so where the risk is. So the third factor is that, economic growth needs to remain resilient here. Sure, we had great retail sales data this week, but if we see any signs that the economy is veering off, we could easily see investors, start to flock back again to those high-quality growth companies. So there is a little bit of a risk there. And then the last one that I would say is that we need to see earnings growth converge between, these 7 companies and then the S&P 500 x these 7 companies. It might sound surprising because we have seen, fantastic stock, runs over the last year and a half, 2 years, but we're actually about to see in the second quarter, if you look at S&P earnings and you strip out those magnificent 7, the large 7 companies, this is actually going to be the first time since 2022 that we're going to see earnings per share growth for the rest of the S&P 500. So we need to see that continue, and we need to see those earnings catch up, with the earnings growth, continual double-digit earnings growth that we've seen from those 7 companies alone.
So, it feels like for this market, earnings are going to matter this season. It's not just the Fed, and the Fed's going to lift this market. Earnings have to come through. How are you guys thinking about this earnings season that we're just kind of in the early stages of?
Right. Earnings absolutely do have to come through. One, there's a couple things that we'll be paying attention to. If you look at the first quarter earnings season, the amount of companies that mentioned artificial intelligence and AI in their earnings calls was just through the roof. So are we going to continue to see them talking up AI? That'll certainly be an interesting trend, at least, to watch. From the numbers perspective, for us, it's really seeing, okay, are we going to see EPS growth for cyclical sectors and, say, for consumer discretionaries start to move higher? If you look at where expectations currently are for the fourth quarter of this year, so not where we currently are, but future, looking out a little bit further into the year, the expectation is that we're going to see, year-over-year earnings growth for those 493 companies. So again, strip out those large 7 of about 11%. So double-digit earnings growth is the expectation for, the majority of S&P 500 companies, not including those, tech and, the large companies that have continued to do what they've continued to do best and make money and, produce earnings. So yes, starting this quarter, we need to see that that's actually going to be a reality and that we are going to see earnings growth come to fruition. Because like I said, we really haven't seen that since 2022.
Do you guys like the smalls right now?
We do. We see, look, if you're someone who believes that interest rates are going to come down, which we are, our economist's prediction is that we'll see a Fed rate cut in September, another one later in the year. We'll continue through the year. We're also, our chief investment office expects that 10-year treasury yields will probably end the year somewhere around 385. One of, the most pure ways to play a decline in interest rates is small caps, because those companies that have higher debt burdens are, at the forefront of the debt game, given that they just have more debt on their balance sheets. So yes, we do feel as though right now, if you don't have any small cap exposure in your portfolio, it could be time to add some as the tactical play. But, small caps in general have more risk than large caps. So make making sure you can take on that risk. But yes, we do, see potential for small caps to outperform, from here on out.
All right, Sarah, thank you so much for joining us. Always great to catch up with you. Sarah Ponsek, financial advisor, UBS Private Wealth Management. Full disclosure, I am a client of UBS Private Wealth Management, Tony O.C.
Full disclosure, I'm a fan of Sarah Ponsek. So.
Yeah, I know. She's great. From Bloomberg News, Bloomberg Radio, TV back in the day, and now she's at UBS.
So we both have our biases there.
Yeah.
That's fair.
Going down in Boca Raton, Florida, so very good. It feels like if you look at the S&P, the NASDAQ here, I mean, we've had guests come in over the last week or 2 or 3 saying the market's just kind of looking for a reason to pull back a little bit. And maybe just talk about tariffs and kind of trade policy.
Exactly.
That's all it needed here for this pullback.
Right, and Paul, you've been talking about this for a while, that there is going to be an event where, and you were thinking more maybe in the fall once we get through earnings, but this may not be, it might be a rolling event that sort of impacts those tech stocks. All right, much more coming up. Brad Stone with his amazing piece on President Donald Trump. In the meantime, World National News, Michael Barr.
Thank you very much, Alex. Bo, it's day 3 of the Republican National Convention. Tonight, Ohio Senator J.D. Vance will introduce himself to a national audience when he delivers his first speech as the Republican vice presidential nominee. Bloomberg's Anne-Marie Hordern is in Milwaukee.
I think for J.D. Vance, it's going to be about, one, this is the first time we'll see him as the VP pick. It's the first time that this RNC will hear from him, and part of it's going to be an introduction of who he is. He's going to talk about his upbringing in Appalachia. He has a memoir out about this. He was raised by his grandparents who were blue dog card-carrying Union Democrats. And he's going to talk about how that Democratic Party doesn't exist anymore and how Trump's policies make sense for America, especially Americans that feel left behind and Americans that feel like inflation has just eclipsed their paycheck.
Bloomberg's Anne-Marie Hordern. Peter Navarro, who served as the top trade advisor to former President Donald Trump, was released from federal prison this morning. Navarro served a 4-month sentence at a federal correctional institute in Miami for defying a congressional subpoena. Navarro is listed among the speakers at this week's RNC. The Department of Homeland Security's Inspector General says it's investigating the Secret Service's handling of security for ex-President Trump the day a gunman tried to assassinate him at a Pennsylvania rally. The agency said today the objective is to evaluate the Secret Service's process for securing Trump's Saturday event. President Joe Biden already had directed an independent review. Finally, Paris Mayor Anne Hidalgo swam in the Seine River this morning. She is seeking to show that the river is clean and ready for the 2024 Olympic Games that kick off later this month. France spent the equivalent of $1.5 billion for the river's cleanup. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a mixed reaction on Wall Street. The U.S. said to be considering its most severe trade restrictions yet on China's chips access. Right now, I want to check in with the tech-heavy NASDAQ down more than 2%, 402 points, 18,106. We have the S&P 500 down more than 1%, 63 points, 5,603. And the Dow up 0.2%, or 108 points at 41,068. Take a little bit deeper dive. We'll use that IMAP feature on the terminal of the 11 major industry groups. Well, we have the biggest drag coming from information technology. You look a little further, you see semiconductors and then semiconductor materials, equipment with Applied Materials at the top of the list. Applied Materials shares down about 6%. Semiconductor, those stocks really taking a hit. We have NVIDIA, Broadcom down 5%, AMD down 7%. We have the two-year yield, 4.46%. That's up 4 basis points. And the yield on the 10-year, 4.18%. And that's up 2 basis points. That is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. I'm Alex Steele, alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance, and sometimes some politics, with our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries worldwide. It was the Business Week piece that has now been heard around the world. It was an incredible front page on what Trump would do with taxes, tariff, the Fed, and more. It's a real deep dive into Trumponomics in a way that I have not seen yet. It's actionable, it feels realistic, and it's really boiled down so we can really get a grasp on what a Trump 2.0 and Trumponomics actually means. And we can thank Brad Stone, the editor of Business Week for Bloomberg, to kind of put all this together for us. He joins us now from San Francisco to California. Brad, I found this to be an extremely helpful piece because if you listen or you read excerpts from interviews with Trump, it's very difficult to get to concrete ideas, and you guys did an amazing job of doing that. How hard was it?
Yeah, thank you, Alex. Well, I mean, look, he wanted to talk. We'd actually put queries out to both campaigns. We heard first from former President Trump. You know, this is Business Week, so our mandate is business, obviously, economics, the world order. And we went there to interrogate him about an economic plan that many economists think is a bit contradictory. I mean, President Trump talks about lowering inflation. The agenda is, higher tariffs, less immigration, which potentially raises wages. He talks a lot about lowering interest rates and then bringing members of the business community into his administration. So this is a topic he wanted to talk about. To put it in context, we talked to him 2 days before the first presidential debate and about 2 weeks before the assassination attempt. But even then, I think, he is writing what he believes, at least, and his campaign believes, is a heightened sense of momentum.
So, Brad, there's a lot of areas here in terms of economics to explore. Talk about taxes. How does he feel about taxes these days? He certainly had some big tax legislation in his first term.
That's right. And one part of his plan is to extend the Trump tax cuts. Another part, which he told us, was to lower the corporate tax rate. He told the Business Roundtable that he wanted to bring it down to 20% from 21%, if for no other reason that he likes large numbers. But then he said he would even get it down to 15% if he could. The challenge here, of course, is that there's they don't delineate any way to pay for this, to make the numbers parcel out and do anything other than raise the federal deficit. And there is really, I think, a paucity of specifics here, which is one reason why proxies have kind of tried to fill the void with things like Project 2025, which then Trump really distanced himself from. But, I think, with the broad brushstrokes we got is Trump wants to lower taxes and extend his tax cuts.
What I also felt was very interesting is the myriad of views in relation to the tech industry. So on the one hand, okay, lower taxes, yay, tech industry. He seems to embrace crypto. Clearly, with J.D. Vance, there's sort of an embrace of VCs, but big tech is very complicated. And how did you parse through that?
There's some contradictions here, Alex. I mean, the first is, he's obviously very pro-American business, and yet he's turned on TikTok and believes that banning TikTok would only empower Mark Zuckerberg and Facebook. The second thing is, in the first term, he talked a lot about cryptocurrency and how it might engender fraud. He wasn't wrong about that, obviously, but now he's flipped on that as well. The bottom line here, and the way I interpret it, is that for Trump, it's all about personal relationships. And he went and talked a lot about Tim Cook and how smart he thought Tim Cook was, in large part because Tim Cook went to the White House to ask for relief from the first set of tariffs. He likes it when people come and pay their respects or at least visibly look to be on what he considers to be Team Trump. And so, in terms of crypto, and a lot of people in that community are now pro-Trump. And, in terms of TikTok, where he's very popular on TikTok, and of course, Jeff Yass, one of the backers of ByteDance, is a Trump supporter, you can kind of see why these contradictions are sort of bundled into his views on technology.
Tariffs. Certainly, it seems to be the topic, at least in the trading today. We've had both sides of the aisle talking about tariffs and tough tariff talk. Mr. Trump used tariffs quite,
liberally
in the first term. How's he thinking about tariffs these days?
It's interesting, Paul. I have not spent much time thinking about President William McKinley, the 25th president, even though he was from my former state of Ohio, and Trump brought him up repeatedly because here's this 19th century president who, before the age of a federal income tax, was raising tariffs and bringing in money, and he said that McKinley is overlooked. Who knows what book club he's part of, but clearly they've been reading histories. And he wants to raise tariffs. He thinks tariffs are underrated. He's talking about a 10% across the board tariff. He's talking about raising the tariff on Chinese goods to 60% or even 100%. And, he says they're a great negotiating ploy. He tried that in the first term, and obviously then, a lot of U.S. companies, particularly tech companies, complained, and they were quite generous in their carve-outs. But this is a big part of Trumponomics, and most economists think that companies don't pay those tariffs. They turn around and pass them to customers in the form of higher prices. So we pressed him on it, and I think there are some unresolved contradictions and tensions there.
What's also interesting, I was reading a JP Morgan note about commodities and what the Trump administration would do to commodities. Obviously, that's my beat. But what they made the point is it really depends on the sequencing. So if you go to corporate taxes first, tariffs come later. Like the sequencing of how all of this works will really depend then on what the market reaction is. Did you get any sense of that?
No, in terms of how we would do it, I didn't. But yeah. I mean, one thing that impressed us or was impressed upon us is that in 2016, he was unprepared to win, and he surrounded himself with people maybe a bit impulsively, and he says that he would do it differently this time. That he knows who's loyal and who's not, and he's experienced and he knows everybody this time. And it just seemed to us that they were, that he's prepared to move quickly. In what order, I don't know, but particularly if he controls both houses in Congress, that they have an agenda that they're pretty much willing to implement at blitzkrieg speed.
Jamie Dimon as Secretary of Treasury, 30 seconds, Brad.
Yeah. What did he call him? An overrated globalist once. Look, he's courting the business community. Who knows if Dimon would do that, particularly considering how former members of Trump's administration often ended up being treated somewhat badly or breaking with him. But yeah, I mean, I think Trump wants to go and it's very important to him that business leaders like him. I mean, that comes through in the interview. And so he's doing his bit to court them as well.
Brad, thank you so much. Really, it was a great piece. It was so helpful, and it helps to bring perspective then to market reactions as well. Brad Stone, he is editor of Bloomberg Business Week. So usually I have a routine. Yep. Like I have a routine on the way in. I'm like what I'm reading and how fast I have to read it to get right in. And this article just messed up everything.
It does. And the new Business Week, it's a monthly now. But they're keeping the Business Week name because it's got some brand value and it's cool. It is like thick.
Yeah.
And the first cover was Arnaud. Talk about luxury. The second issue, Trump. So they're killing it here. So 12 times a year.
Yeah, so definitely check it out, guys. It's definitely worth it if you're interested in anything Trump related. All right, coming up, beer, non-alcoholic, is that a thing?
No.
This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Shares of First Horizon are lower. They're down about 4%. Now, the firm reported adjusted earnings per share for the second quarter topped estimates. The lender said it sees 2024 net interest income flat, down to 2%. That's why those shares are lower, down 4%. Now we go to U.S. Bancorp. Their shares higher. The firm reported adjusted earnings per share for the second quarter. That topped those estimates. We'll stick with banks. We'll head to HSBC. It has a new chief. The CFO is its former CFO, George El Hedere. It's been named CEO. He will start the new role in September. Shares in London right now, they're up about 0.2%. Back to earnings we go. We have shares of Johnson & Johnson higher after opening its books. Bloomberg's Jess Menton has those details.
The company did beat estimates for second quarter profit and revenue, driven by strong sales, not surprisingly, when it comes to its drugs, including cancer treatment and its blockbuster when it comes to psoriasis. Year to date, though, for Johnson & Johnson, that stock is actually down about 4% so far in 2024. If you compare that to overall in the S&P 500's healthcare index, that sector is actually up about 10%.
J&J is up about 3%. Adidas raised its annual profit target for the second time in 3 months. That's thanks to strong sales of its Samba and Yeezy footwear, but its shares lower in Germany. They're down about 1%. Spirit Airlines estimated that total revenue for the second quarter would be lower than previously expected, and that has shares falling down about 9% right now. United Airlines opened its books after the bell, along with Alcoa and Discover Financial. We have some promising news, and that's from early-stage results from Roche's experimental weight loss pill. That news has ADRs higher. That is your Bloomberg. Business Report. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. It's the hump day. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide, and we need them when we got the S&P, when we got the NASDAQ off by over 2%. We also keep you updated on world and national news, and for that, we go to Michael Barr. Michael?
Thank you very much, Alex. Paul, Lisa, the Republican National Convention begins its third day in Milwaukee. Tonight, Vice Presidential nominee J.D. Vance will speak. Yesterday, the RNC showcased classic GOP themes like border security and public safety. With Trump's primary rival speaking, it was also an occasion for the GOP to demonstrate its unity. Former presidential candidate Nikki Haley was asked to make a last-minute appearance at the convention to give her strong endorsement for former President Trump and address any Republican voters that are on the fence.
My message to them is simple. You don't have to agree with Trump 100% of the time to vote for him.
Florida Governor Ron DeSantis also spoke.
We need a commander-in-chief who can lead 24 hours a day and 7 days a week. America cannot afford 4 more years of a weekend at Bernie's presidency.
Britain's King Charles III spoke at the opening day of Parliament in London this morning. King Charles spoke to the House of Commons and House of Lords, mapping out a legislative agenda for the new Labour government under Prime Minister Keir Starmer, including action on climate change.
My government recognises the urgency of the global climate challenge and the new job opportunities that can come from leading the development of the technologies of the future.
King Charles also says his government will continue to give its full support to Ukraine. A follow-up now to country music star Ingrid Andress, who gave a less than stellar rendition of the national anthem before Monday's home run derby. Andress apologized, explaining she was drunk and she's headed to rehab. Last night, the American League beat the National League 5-3 in the All-Star game. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex.
All right. Thanks so much, Michael Barr. So here is one I had to talk about. I'm reading it from the Irish Times, but it was pretty much all over most European papers today. Apparently, Munich on Thursday is going to open its first alcohol-free beer garden in a nod to changing consumption habits. And Munich, I should say, is where Oktoberfest Beer Festival happens. This will be near the Bavarian capital's main railway station.
Okay.
And it's going to serve its patrons soft drinks, mocktails, juices, water, and non-alcoholic beers to try and get the strip image, its boozy, seedy image, away. I don't know how that's a sustainable business model.
Is it? Is it enough demand? I don't know. But I mean, Munich is a great town. Been there a few times. Love it. Beautiful city. But again, you kind of think Munich, you think having a nice big stein of beer, isn't that part of it?
Well, also, like, if you go somewhere, you could have 10 beers. I mean, I could not. But one could have 10 beers and be out at night. I'm not having 10 mocktails. Like, the ratio is not going to be, even if you're going to charge the same, the ratio is still not going to be the same. Yeah.
They do?
Yeah, you can get like a mocktail for like $15 and maybe like a cocktail for like 20. So maybe it's, not the same, but it's close. But you're not going to drink as much. That's the whole point, is alcohol makes you drink more and eat more. Mocktails don't do that.
All right, we'll have to see. I mean, you think Germany and you think good beer, good quality beer, and people who liked it enjoy it. But maybe that's where maybe that's part of the market is for this non-alcoholic beer. I don't know.
Actually, the non-alcoholic beers have gotten a lot better.
Have they?
Yeah. Okay. They used to just be like 20 plus years ago, and that just tasted like Bud Light, basically, so nothing. But the non-alcoholic beers have definitely gotten much better. But again, like a whole bar based on that, I don't know. I don't know. Non-alcoholic beer garden, that feels weird to me.
All right, we'll see. We'll keep an eye on that story.
You don't have thoughts on this?
What's
Matt
that?
Miller.
Oh, yes.
Matt Miller would have lots of opinions on
All
this.
things Germany.
Yeah.
All things Germany. Driving fast in Germany.
And apparently he can do that if he has a non-alcoholic beer.
Yes.
All right, coming up in the next hour, we're going to talk about airlines. George Ferguson, Bloomberg Intelligence Senior Aerospace Defense Analyst, will be joining us. We're previewing next week's Farnborough Air Show.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Abigail Doolittle, get a look at what's happening in the markets. Lots of movement here, probably a lot of great stories as it relates to what's happening out there in the market. George Ferguson's going to join us, talk to us about the Farnborough Air Show. That's the big one where a lot of big deals get done in terms of buying and selling airplanes. So we'll get the preview there. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. He's down in Washington, D.C. He's going to check in on recent election research. Boy, is that in demand these days. Tally Miller, Chief Business Officer at REE Automotive, on the state of the EV industry and recent company news here. I just don't know where the ultimate demand is for EVs. Hopefully, Tally will be able to give us a sense of kind of what's going on there. But right now, let's kick everything off with Mr. Charlie Pellet.
Thank you very much, Paul Sweeney. Here's what's going on. We've got stocks trading decidedly mixed, with the Dow Jones Industrial Average up 79 right now. That is a gain of 0.2%. S&P 500 index right around the 5,600 level. We've got the S&P down 67 right now, a drop of 1.2%. NASDAQ dropping 439 points, a decline after yesterday's surge. We've got NASDAQ now lower by 2.3%. 10-year 4.18%, with a 2-year 4.46%. Spot gold is trading lower by 0.2%, $24.63 the ounce, and West Texas Intermediate crude up 2.1%, $82.42 a barrel on WTI. Bottom line here, stocks are trading mixed. The Dow higher, S&P trading lower, down 1.2%, NASDAQ down 2.4%. Mike Schumacher is head of rates and macro strategy at Wells Fargo Securities. He says he understands why the Federal Reserve has been reluctant to cut rates.
They don't have a lot of confidence in their long-range modeling ability. That's why they want to wait. A lot of people are saying, gee, inflation data are cooperating, why not go now? And the reason for that is because the models have been so far off so many times, they want to wait until they see more evidence. So wait, get that opportunity, then go.
Mike Schumacher of Wells Fargo. Again, the 10-year right now, 4.18%. Earnings news, J&J reporting this morning. Johnson & Johnson's second quarter profit did beat Wall Street projections on strong pharmaceutical sales, while the company cut its full-year forecast to account for a spate of recent acquisitions. J&J up now by 3.3%. Recapping stocks mix, the Dow pushing higher. We've got the S&P at 5,600, while NASDAQ trading lower by 2.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thanks so much. Alex Steele here alongside Paul Sweeney. Welcome to Bloomberg Intelligence Radio. The decline in tech is really quite stunning. Paul, you've been calling it. Maybe this is early. I mean, we'll see how much legs the downside has. But, you know, tech off over 2% is significant. Abigail Doolittle of Bloomberg joins us now. Abigail, I know you're looking at some specific stocks, and we will get to that. But I am curious if you can help us understand kind of where some resistance areas maybe, or support areas, I should say, may be for the NASDAQ and the NASDAQ 100.
Well, it is quite a sell-off, but what's interesting about it is right now, this is only the worst day since last Thursday. So that's a fancy long way.
Wait, really?
Yes.
Oh my gosh, wow.
So
it feels like forever since this has happened
agreed.
or something.
So at the lows, and we're not far from those lows, it would be the worst day for the NASDAQ 100 since last October. But over the last 17 days, the NASDAQ 100 up 13 of those days, and 3 of those declines greater than 1%. So when we have sold off, it's been pretty serious. Investors are a little bit nervous, and with good reason. This index, out of the 2023 lows, is up, I'm going to measure this right now, had been up 48%, out of the pandemic lows up 200%. I mean, it basically went from sub 7,000 to above 20,000 in about 4 years. You know, too far, too fast definitely comes to mind there. In terms of what might be next, today's move lower, it's on a conglomerate, you know, really a combination of a variety of factors, but it's a gap lower, which means there's a lot of space between yesterday's close and today's open, and right now we're closer to the lows. That space tells you that investors were really surprised by the news that came out of the Biden administration around the idea that they may they're weighing another crackdown on China chips. In addition, the Trump ticket, I would argue, very negative for big tech. And this started yesterday. J.D. Vance has made it clear that his view on big tech is a negative one. So we saw big tech selling off yesterday. The former president, Donald Trump, telling Business Week that he's not so pleased around Taiwan and their positioning around chips. So you put this all together, you have NVIDIA down right now more than 5%. That's also bringing down Broadcom down about 5%. But it's not just the chip makers, it's also big tech. So, you know, there's the Trump trade, which is insurance, energy, banks, all these, I would say, more value-oriented. And then I'm now dubbing it, doesn't have the alliterative effect, but the Vance trade is anti-tech. You put the two together, you could see a healthy rotation into some of those other sectors. And sure enough, today, United Healthcare, J&J higher, AbbVie, Berkshire Hathaway, JP Morgan, ExxonMobil, Pepsi, very, very healthy. But because big tech is such a big weighting to these indexes, that's why we're seeing these declines.
And I'll call out again the small cappers on a relative basis, really outperforming again. The Russell 2000 is only down 0.6%, so maybe that trade still has some legs here.
Because I didn't answer Alex's question. I got carried away by the what and the gap down, because again, that gap is important. It tells you people are really surprised. That in and of itself suggests that the selling will continue. So the next level of support for the NASDAQ 100, not so far below, somewhere probably around, let's call it 19,500. Somewhere in there. But, you know, a lot of people don't like to do this, but I do. So I'm looking at that 50-day moving average, but more so I'm looking at the 100-day moving average around 18,600. And then, of course, and we hit this last October, and today is selling at the lows, the worst day since that day that hit the 200-day moving average, or right around there, closer to 17,000. So we could see, you know, some sort of a correction for sure, but it would be super healthy just because of how far we've come. And when I look at the Russell 2000, this chart, I mean, this rotation, this Russell 2000 rotation is ridiculous. If ever I saw a parabolic uptrend, it's over the last several days, and that was a gap higher. Those investors surprised by, you know, I was actually, unfortunately, out sick last week, so in terms of what drove that higher on that particular day. But I would suggest that gap looks unsustainable because of that parabolic uptrend. At the very least, we'll see a working back. So I would say no, the Russell 2000 rally, it's probably going to have to consolidate if it's going to have any chance of going higher. And what's really interesting, and what we forget, or maybe some people forget, is that we have these big cap indexes at all-time highs. The Russell 2000 hasn't been an all-time high for years. It's about 10% below its all-time high. So there's really an interesting gap there to be filled potentially, but I'm not sure it's going to happen.
All right, very good. Abigail Doolittle, thank you so much for joining us. Abigail Doolittle, she covers all the markets and absolutely indispensable on days like today when you got some wacky trading out there.
And she's so excited.
I know.
You're so excited with the sell-off. It's nice.
Exactly.
Okay.
Something to cover up charts. Because you got the Dow Jones Industrials up 69 points, so go figure that. All right, Alex, as when I'm managing BI, one of my duties was approving international travel. And some analysts do it better than others. And one of the best is George Ferguson. I mean, I'd see coming across my desk, I got to go to Paris. Next year, I got to go to London. And I'm like, what is this? He says, no, I got to go to these air shows because that's where all the deals happen. The airlines buy the aircraft from the Boeings and the Airbuses. But why can't they do it in Cleveland? They always do it in Paris or London. And so George is going over there next week, Farnborough Air Force Air Show. George Ferguson, Senior Aerospace and Airlines Analyst for Bloomberg Intelligence. George, if I'm Boeing and I'm going over to Farnborough, over outside London next week, what's my pitch here?
Well, first I want to just say thank you, Paul, for all those approvals. So let's start there. So if you're Boeing and you're going to Farnborough, I think it's all about comforting your customers, right? I think they're going to hold customers' hands, talk to them about the efforts they're putting in place to improve quality, probably try to paint as good a picture as possible about where their deliveries are in the queue, that the airplanes are coming, that the back half's going to have a lot more production. I think that's largely what you're doing. You'll sell some airplanes, but I think the most important thing you'll be doing, again, is holding customers' hands.
What are customers freaked out about?
Well, I think quality and schedule, right? So obviously they don't want panels to come out of their airplanes, so they're going to be telling Boeing, tell us how you're stabilizing your production process. And we've seen some of the progress on that, but it's going to be slow, right? They're going to buy Spirit Aerosystems. It'll take till next year. They're implementing different policies. So the customers want quality because they don't need problems like that panel. But then right after quality, they're going, so do you think I can count on my last half of 2024 deliveries and my 2025 deliveries? Because those airlines want to know what they can dial in for additional lift or replacement lift into their schedule. So I think that'll be extremely, top of mind for their customers.
All right, so I'm envisioning Airbus. I think they're going to be breaking out the good champagne this year at this show. I mean, are they?
And is Boeing like ginger ale? Like, is that where you're going with it?
So what's the the Airbus pitch here? Because they still have, I guess, some delivery issues as well.
Yeah, I mean, look, there's no champagne at the show, I can tell you. I can assure you. The Airbus has a similar problem, right? And so we saw it a couple weeks ago. They warned about their ability to ramp up production rates, right? They pushed out some of their top-end rates. They're 75 a month on the A320. They pushed that out a year. They're not immune to the problems in the supply chain. It's just gone a bit better. So I think, if you're Airbus, you would have liked to have capitalized. You are capitalizing a bit, but you're not capitalizing as much as you'd like to. The supply chain for both these manufacturers is somewhat intertwined, especially for the engines, and engines are limiters. So, I think Airbus has a similar challenge. They'll be reassuring customers just to much less of an extent. I think both of them are going to be pushing, obviously as always, to add to the backlog and get sales. But there's lots of airplanes, and especially the 737 and A320, the bread and butter of these two companies' lineup here, where they make their profits and their cash flow. You're talking back of this decade before you get airplanes if you put those things in the order book. I don't see either ready to wheel and deal and make great, price concessions for customers on those. And if you're a customer, I think you should have been in the queue earlier. I think you saw the signs that there were problems in supply chain. So I don't know. I think the customers might sit in their hands a little bit. Plus, I think in the U.S. market and in Europe, we're starting to see fares soften a bit. So customers are probably taking a pencil out and thinking about what their fleet plans really ought to be, too.
Yeah, well, that's actually what I wanted to ask about and sort of tie it into United Airlines earnings coming out after the bell, because the big issue we've seen in the domestic market in the U.S. is just overcapacity. Like, there are too many airplanes, and that's hurting the airline. So isn't it weirdly a good thing that these plane deliveries are getting delayed?
It may be. I've typically found the only thing that ever saves the airline industry is some exogenous factor not allowing them to get the capacity into the marketplace. If there's nothing limiting their ability to get capacity in the marketplace, they put as much of it in the market as they can, and you get what you have right now. Yeah, and so this morning, we also saw Spirit Airlines warn on their second quarter earnings. It's all about revenue. It's all about yields for them, too. So I'd say Delta was disappointing. The lower-cost carriers, the budget carriers, will be even worse. And remember, in the back of every airline's airplanes, is a small budget carrier. In the back of a United airplane is a small Spirit Airlines. So that's going to hurt their revenues and yields as well. And I think that's what we're going to hear after the bell, is a little bit of woe on the, hey, the yields didn't come in where we thought they would. Things are softening.
So going back to Farnborough, I guess it comes back to Boeing. Where are we in terms of their deliverables? I mean, where are they relative to where they need to be in terms of producing? Let's just say the 737 planes, which are the backbone.
Well, I mean, their deliveries during 2Q were very sporadic. Near the back end of 2Q, I think they were up in the 30s, if I recall correctly, on the 737. What we think at Bloomberg Intelligence is we think they ought to be getting into the higher 30s consistently in the second half. We expect them to burn a lot of cash in 2Q. We expect them to bring themselves down to something just above. We think actually right around $13 billion in cash. We think they'll burn about $4 billion in cash, after CapEx. Can't keep doing that, so they need to really spike up those deliveries. I suspect they're putting things in place to do that in second half. So I think it needs to be mid-ish 30s to higher to really start to stem that cash flow, maybe generate a little bit on the 737.
What do you think is, if I go to United, back to United for a second, what do you think is priced into a stock that trades at $47? Like, I know you don't do stock prices, but I'm wondering if you've like fully accounted for, in the Americans and the Deltas and United, the softness in the domestic market, the overcapacity, but still a relatively okay international market.
Yeah, I mean, they all corrected around the time that we saw, Delta report. So the market is clued into the fact that yields are probably not going to be, as good. I would guess that United, the United's earnings are probably going to be pretty in line with what investors would expect here tonight. Again, given sort of the Delta news and Delta leading, I kind of guess that weaker pricing for the 2Q and 3Q, the important earnings season, is sort of being considered by investors now. I guess the question is, does that trend continue, right? Is this a weak summer 2024? Look, we don't expect much from 1Q and 4Q anyways, the stub seasons. The next time I think we really have the opportunity to really put some really nice earnings on the board for the big U.S. airlines is going to be into next year. And the question will be, will this softness that we're seeing this summer, will it persist into next year? Or will the airlines dial back their capacity? And I think that's the big challenge, right? We just saw capacity growth well above GDP growth. I think the airlines thought maybe the consumer was still decoupled from that sort of GDP, spend additional money on vacation trend. What we saw was pandemic is over, travel bounce back is over. You got to tie your capacity back into GDP growth. You decide what the multiple ought to be. The question will be, will they do it for next summer season? I mean, I think they could get some of it done maybe for 3Q, but I just don't think the airlines can react that fast. And so I think you're really looking at next summer and the question about how much capacity they're going to put in the marketplace.
Right. All right, George, appreciate it. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. He heads over next week to London, England, Farnborough Air Show. It's always a question for, announcing big orders, big airlines placing big orders and things like that. George kind of tempering the enthusiasm there a little bit, given kind of where both companies are, Airbus and Boeing are, in terms of their production capacity. All right, coming up, Nathan Dean, Bloomberg Intelligence, Senior Policy Analyst. He's in Washington, D.C. He's one of the more sane people down there. He actually knows what's going on, and he can explain the craziness of Washington, D.C., so we'll get some of his latest research. We got an election coming up, folks, so lots going on in D.C. That's coming up. This is
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Tough day for a lot of the chip makers. We are looking at a mixed market right now. The Dow pushing higher. S&P, NASDAQ, they're both in the red right now. Right to the numbers. S&P back above 5,600, 5,604 right now. It is down 62 points. Still a gain, still a loss of 1.1%. Dow Industrials up 142 points, building on yesterday's gains, up another 0.3% at 41,093, breaking through that threshold for the first time. We've got NASDAQ down 418, down now by 2.2%. 10-year yield 4.17%, with a 2-year right now 4.44%. Spot gold down 0.2%, 24.64 the ounce, while West Texas Intermediate crude rallying 2%, 82.41 for a barrel of WTI. I mentioned the chip makers, worries that politicians are taking a harder stance on China and Taiwan, sparking a pullback across tech shares. NVIDIA, case in point, down now by 5.2%. Advanced Micro Devices down 7.5%. Broadcom down now by 5%. So again, recapping here, we're looking at a mixed market. The Dow at another record, up 129 points, up 0.3%. S&P down 2.2%, and a pullback for the Russell 2000, down by 0.6%. 10-year again, 4.17%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. All right, 2024, it's an election year. We all know that. And that means an election is certain to be pivotal catalyst for markets and companies in terms of legislation, regulations, enforcement, and other government actions. Let's put some numbers on that. $25 billion of health-insured revenue, that's at risk as subsidies expire. 5 to 19% potential increase in required capital for large banks. 28% corporate tax rate possible if Democrats sweep. So there are just a million variables out there that will be impacted by this election. So what do? You go to Bloomberg Intelligence. They've got a definitive research report on this election, the two candidates, the two policies, and what it could mean for banks and all types of companies around this country. Nathan Dean joins us here. He's the mastermind of this report. 42 pages it is. Bloomberg Intelligence Senior Policy Analyst. Nathan, I don't know where to start here because you've got the Republican Party and the Democratic Party clearly have different priorities as it relates to economic policy, regulatory policy. Where did you start?
So I think what we did is we started with the report by looking at what are the key sectors to watch, and we really had 5 of them. The first one was investment banks. As you mentioned earlier, if President Biden wins, you could see somewhere between 7 to 10% increase in capital requirements. If President Trump wins, that could be off the table. We looked at electric vehicles. The tax credits for the electric vehicles could be at risk during our tax reform debate next year. Like you mentioned in terms of tax, global manufacturers. President Trump has called for a 15% corporate tax rate. And just a few minutes ago, Representative Steve Scalise said he's going to make the tax cuts for individuals permanent. So tax reform and the impact on manufacturing. And the other two were healthcare to the $25 billion subsidies. That's really for Centene and United Health. And then finally it was big tech, because whether you get President Biden or President Trump, more likely than not, you're going to get a very skeptical Washington towards big tech, certainly both in Congress and also in the enforcement side.
Nathan, the question then becomes, what can he, and this has been the question throughout his 4 years also, what can he do on his own, and what would he need a Republican Congress for?
Yeah, so, I think one of the biggest questions we get from clients is, what does the executive order landscape look like if President Trump wins? And I'd say about 90% of the time, an executive order is a fancy way of the president picking up the phone and saying to his staff, I expect you to do X, Y, and Z. But there's a difference there. The difference is for trade, tariffs, and foreign relations, the power of the presidency is a lot more powerful when it comes to that. So when President Trump uses words like nasty, calling the European Union, as he did in this Business Week interview that I recommend everybody read, that's something that investors have to pay attention to. Now, when it comes to tariffs, the president can certainly go out there and say, I want to do this, but then it's going to be up for Congress and the business community and so forth, but potentially try and influence the White House to either get to the appropriate amount or try, in some cases, stop it from even happening.
So are there certain industries that you know, I think about the healthcare industry. I'm trying to think about regulated industries, and healthcare is certainly one of them. And you mentioned the subsidies, but do the Republicans and the Democrats think differently about the economics of healthcare?
Yeah, it does. And this is really where the process comes into play, because that subsidies, that $25 billion subsidies, is Obamacare subsidies, and that requires an act of Congress. And I think you don't need to be a Washington expert to know that gridlock is going to continue no matter who wins the presidency. So look for subdued actions from Congress when it comes to healthcare. Now, the difference is on the regulatory side. On the regulatory side, and this is where you look at the FDA and a lot of the actions they've been doing, you can bypass Democratic opposition and just implement your own policies, but it takes time. And so I would say just general rule of thumb for a lot of the healthcare issues that are going on at the agencies, after President Trump, if he wins, were to input his new regulatory leadership, at that point, you probably have another 18-month to 24-month window for any regulatory change. So for the healthcare industry, there's a lot of time to prepare for any changes. You'll know exactly what's going to happen well before it does.
Going back to the EV point, it definitely feels like solar, EVs, stuff like hydrogen from the IRA, like those are the stuff maybe potentially on the chopping block, potentially, with a President Trump win. But then the Musk thing is weird, because President Musk, what does that mean? Elon Musk has definitely become a big supporter of President Trump, donating to super PACs, and I'm wondering if that relationship will change the calculus to how President Trump sees electric vehicles.
Absolutely, you hit it right on the head, and we even say this in the report. There's a difference between headline risk and reality. So if you look at the electric vehicles, you can look at statements that President Trump and other Republicans have said, saying they do not like these electric vehicle tax credits out there and so forth. But then you balance it with the Elon Musk, and even taking it to a grander scale on the Inflation Reduction Act, a lot of the benefits of the IRA are going to GOP-led states. So what you have to do here is, A, take the statement, okay, if President Trump says, I want to do away with the electric vehicle tax credit, how am I going to do that? Most likely, I'll do that as part of tax reform and via the reconciliation process, which means I probably won't have any Democrats going aboard with me, so I need all Republicans on board. At that point, if Elon Musk starts whispering, saying, hey, we like these tax credits for the EV world, then that change may not even be a high priority anymore. So I would just say that for a lot of the statements, you have to remember short-term risk versus long-term risk. And as we see with every single election, politicians of both parties love to go out there and say, I'm going to do X, Y, and Z. But then when they get into power, it's X, Y, Z minus a whole bunch of other stuff, because I'm going to be a little bit more moderate now.
Hey, Nathan, how about for our good friends on Wall Street, M&A bankers and lawyers? Under this administration, the regulator has been pretty tough, and it's been pretty tough to get big M&A deals approved. Presumably, that would be more Wall Street friendly, M&A friendly with a Republican administration?
It really depends on the leadership that President Trump, again, if he were to win, would put in place at the FTC and the DOJ. Because you have one side, you have the Republican business-friendly view, the stereotypical Republican business-friendly view. If you get somebody like Jamie Dimon, and I'm just picking on the banking execs, if you get somebody from Wall Street, like a Gary Cohn individual that was in his last administration, then you could just reasonably say that M&A activity will get a little bit earlier or a little bit easier. But if you get somebody that comes from the economic populist side of the party, for example, Senator Vance, the vice presidential candidate, spoke in favor of the FDIC chairwoman, Lehman Khan, and said that she was one of Biden's best picks. And so if President Trump comes out and picks an economic populist for the heads of the FTC and the DOJ, M&A may be very difficult for the next few years. It really just depends who's going to get that nod, and that would come right after the election, or right after inauguration if President Trump wins.
Now, obviously, what we're seeing in the market today is a steep reaction to tech selling off, but also the news that potentially President Biden administration is looking for other ways to curb foreign technology chips making it into Chinese things. So ASML, Tokyo Electron getting hit. Are these kind of companies in this sector going to be hurt, like, no matter what? Like, either way, both administrations are going to crack down even harder on China. And how do we think about that?
So the answer is at a high level, yes. So the Biden administration has already even put out a proposal on Treasury. The Treasury Department has put out a proposal limiting private equity investments into semiconductors, artificial intelligence, quantum computing in China. So being seen as tough on China is good politics no matter who you are. But the one thing that we're seeing from statements from the White House, whether it's Trump or Biden, is that there's always chances for flexibility down the line. Because the way this works is that the president goes out and makes a statement, and then it's up to his staff to actually implement it. And as you go through this implementation, you often see instances where the president dials back. Because look, whether it's President Biden or President Trump, they have to look Xi Jinping in the face and say, we're going to do this. So I would just say that, you know, starting it right now, the answer would be yes. No matter who you are as president, it's going to be seen as difficult. But let's look at the geopolitical tensions as we get into 2025, and let's see if the president's stances changes any, because ultimately what we could face with in, say, 2026 could be dramatically different.
All right, Nathan Dean, thank you so much. We appreciate it. Nathan Dean, Senior Policy Analyst of Bloomberg Intelligence. If you have a Bloomberg terminal, BI Laws, LAWS, takes you to the dashboard that has all the policy research from Bloomberg Intelligence, and they got it neatly laid out there. You can click on the election matrix, and they got all the election research that's been written by all the BI analysts across Bloomberg Intelligence, how different administrations would impact their individual industries. So it's a great place to see all that research in one place, and Nathan Dean is the head there. So that's where you go. S&P 500 off 1.1%. The NASDAQ off 2.3%. The Dow's up, so go figure. With our news in New York City.
Thank you very much, Paul. Alex, day 3 of the Republican National Convention in Milwaukee. Tonight, GOP vice presidential nominee J.D. Vance will speak. Last night, 2 of Donald Trump's chief opponents for the nomination early on have now pledged their full support at the RNC. Bloomberg's Ed Baxter has more.
Nikki Haley saying, make no mistake,
Donald Trump has my strong endorsement, period.
and that people don't have to agree on everything.
We agree on keeping America strong. We agree on keeping America safe.
And Ron DeSantis?
Life was more affordable when Donald Trump was president. Our border was safer under the Trump administration, and our country was respected when Donald Trump was our commander-in-chief.
Ed Baxter, Bloomberg Radio.
Democrats will not hold a virtual roll call to formally nominate President Joe Biden until at least August. It comes after an outcry from some who believe the process was being rushed to head off calls for him to stand aside. The Democratic National Convention is in Chicago in late August. NFL Hall of Famer Terrell Davis is accusing United Airlines of a, quote, disgusting display of injustice, saying he was handcuffed and removed from a flight in front of his family over the weekend. Davis says during the flight from Denver to Orange County, California, he lightly tapped a flight attendant to ask for a cup of ice for his son. He says the flight attendant shouted, "Don't hit me." Davis spoke to CBS.
That moment, I felt all of my dignity. I felt powerless. I felt embarrassed. I felt like, what the hell is going on? Yes. I didn't get a chance to explain what was happening. He didn't tell me what was happening.
Davis was released after being questioned by law enforcement. United Airlines apologized. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, but stocks selling off. S&P, NASDAQ 100 index, Russell 2000, all in the red right now, with the S&P down 65, still above 5,600, 5601, drop right now of 1.1%. The Dow up 153, up by about 0.4%. NASDAQ particularly hard hit. Right now, NASDAQ is down 440 points, down 2.4%. NASDAQ 100 index also down 2.4%, and the Russell 2000 lower now by 0.6%. Stocks falling from highs as concern over tougher U.S. trade curbs on chip sales to China spurs a rout in the industry that has powered the bull market. We've got the 10-year yielding 4.15%, the 2-year 4.44%. Gold down 0.2%, $24.63 the ounce, and West Texas Intermediate crude up 2.1%, $82.50 a barrel. There are fresh reports today on mortgage rates and home construction. And with that story, here's Bloomberg's Vinny Del Giudice.
Industry data show mortgage rates fell last week to the lowest since early March, 6.87%. That could be a reprieve for potential home buyers. The government, meantime, reports a drop in construction starts of single-family homes in June to the slowest pace in almost a year. Building permits for single-family homes also declined, even as builders offer incentives to offset high loan rates. Vinny Del Giudice, Bloomberg Radio.
Among home builders, Toll Brothers down 0.9%, Lennar down 0.8%, KB Home up 0.1%, Pulte Home down 0.3%. Again, recapping, stocks are mixed right now. S&P lower by 66, a drop there of 1.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so check us out on YouTube. Go over there and search Bloomberg Podcast, and that's where you'll find us. I'm just looking at the chart of Tesla all over the place. I mean, the stock's flat year to date, but it's up 75% from an April 2024 low here. So it's just been all over the place. I think it reflects the uncertainty in the market as to ultimate demand for electric vehicles on a global scale. Tally Miller joins us. She's the Chief Business Officer at RE Automotive, joining us via Zoom from Tel Aviv, Israel. Tally, thanks so much for joining us. I wonder in your business, because your company is in this EV business, what's your view of kind of what we're seeing and maybe some waxing and waning in demand around the world for EVs? What's your view?
Hi, good morning, and thanks so much for having me. What we see as we are focused on the EV commercial market, and I can tell you that we see more and more demand driven on the one hand by fleet asking for electric trucks, as well as the infrastructure being ready steadily. So we do see a growing demand on our side.
So why is that? So why will the commercial vehicles and fleets be easier to move over than like Paul buying an EV?
Sure. So the commercial EV market has been growing, I would say, slower or started picking up slower than the passenger EV. But we've seen more and more demand recently, and it's mostly due to the fact that the fleets understand that there is a strong side on the total cost of ownership. So the overall unit economics that makes a lot of sense for them to transfer into EV. In addition to that, the infrastructure is being put in place, and therefore this combination makes it more attractive for them. And that's the reason we see this growing demand in the EV commercial space.
So, I mean, but I think one of the challenges, just certainly in the automotive and personal use space, is cost and the relative high cost of EVs and the inability to bring those costs down and profitably build vehicles at a lower price point. Is that how do you view that issue overall, and how do you think that'll play out?
That's a very good point, and indeed, this is one of the elements that is key for our customers. They call it overall the total cost of ownership. So overall, it's not only the acquisition cost, but then it's what does it take when you use the vehicle. So commercial fleets are being used most of the day. So let's say 95% of the time, the vehicle is being used, and therefore the fact that it's electric rather than internal combustion makes it more favorable overall on the TCO. This is the feedback that we get from our customers, fleet customers such as Penske and U-Haul, with which we work.
There's other ways to sort of also move away from fossil fuels, right? There's hydrogen, maybe hydrogen cars at some point, fuel cell batteries, biofuels, e-gasoline. Are you noticing a rise in any of those options when it comes to commercial fleets?
Overall, what we see from a RE perspective is we are really agnostic to power. The first trucks that we put on place are in the medium duty sector, are electric trucks, and this is where we see a lot of demand right now. But eventually, we are completely agnostic, since our core technology, the core of what we're doing, the technology is can be applicable to any source of power.
Are you seeing different demand in different parts of the world? I know your company is in the U.S., they're in China and other parts of the world. It just feels like in the U.S. might be behind some other parts of the world in terms of consumer demand or just user demand.
Yeah, so overall, indeed, there is a difference between the different locations in the world. So we have started our activities in the U.S. market, and this is where we see a lot of demand right now. We have certified our vehicles in the beginning of the year. We're actually the first vehicle to have certified a full by-wire, and see a lot of demand for that. In Europe, there is demand, but for slightly different vehicles than the ones we see in the U.S. on the commercial space. And China is I would say, a different market in this space. So we are currently focused on U.S. and Canada.
We talk a lot here about traditional car companies and then sort of the upstarts, right? I mean, Tesla's not an upstart, but Rivian, Lucid, et cetera. Volkswagen plowing about $5 billion into a tie-up with Rivian Automotive. What are your thoughts about that? They're going to jointly develop a battery-powered vehicle and software. It helps the German car maker get a boost to U.S. company technology, and Rivian gets a lifeline, basically. What are your thoughts from your perspective on this deal?
So maybe in a sentence, I think it's a brilliant deal for these two companies, but also this indicates the market about the readiness of legacy OEMs to integrate proven and superior technologies. So from a VW point of view, indeed, they integrate the technology, the software-defined vehicles, and for Rivian, it's great because they can tap into the supply chain of VW, and there together they can bring an attractive vehicle from a technology and cost standpoint. For the market, what it shows that legacy OEMs are ready to integrate now technologies, exterior technologies that are proven and that are superior into the core of what they're doing, and therefore it's very relevant for us at RE Automotive.
All right, Tali Miller, thank you so much for joining us. Tali Miller is the Chief Business Officer for RE Automotive. It's a publicly traded company on the NASDAQ. REE is the ticker. She joined us via Zoom from Tel Aviv, Israel, where the company is based here. But it just goes, we saw some news, just really over the last 6-9 months, the U.S. OEMs, auto companies, just dialing back their EV rollout, either timetable, volume targets, things like that. And they're basically saying that they don't see the demand, and that's kind of been the issue. And so is it price? Is it the fact that, you can't charge it as efficiently as you can, as a lot of people would like? What's really holding the demand back?
Yeah, and interestingly enough, when Bloomberg reporters talked to President Trump and editors, and they spoke with them, they asked about EVs, and President Trump said, "I have no objection to the electric vehicle, the EV. I think it's great," and that's sort of in response to if President Joe Biden's done anything with respect to the economy. And then he says the cars don't go far enough. They're really expensive. They're also very heavy, and this is all in that great Bloomberg Business Week piece. So it's hard to that's different. That's different than saying EVs stink. We got to go back to internal combustion engines. They don't go far enough. What does that mean?
Yeah. So it's just it's kind of what I think a lot of people tell you: performance versus cost versus reliability versus preserving value in terms of the resale market. So there's a lot of issues out there, and a lot of the bulls are still saying it's a bump in the road. We're still going to move towards electric. S&P 500 off 1.2%. NASDAQ off 2.5%. This is Bloomberg. Good morning.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Roche Holding ADRs advancing after its experimental weight loss pill showed meaningful weight reduction in an early-stage study among obesity patients, setting up the Swiss drug maker as a challenger in the field. Patients who took the oral medication once a day for 4 weeks lost on average more than 7% of their starting weight, compared with a little over 1% weight loss in patients who received a placebo. ADRs of Roche Holding, they're surging now by 7.1%. Johnson & Johnson's second quarter profit beat Wall Street projections on strong pharmaceutical sales as the company cut its full-year forecast to account for a spate of recent acquisitions. Joseph Walk is J&J's chief financial officer, and he was interviewed this morning on Bloomberg Television.
We are very pleased with the second quarter performance. You know, we had 7%, better than 7% growth across the enterprise, almost 9% in our pharmaceutical unit. MedTech, we were hoping for a little bit better performance, but we've got growth acceleration plans for the back half of the year that we're very, very confident in. If you look, just based on, you know, apples being apples, we would have actually raised our guidance by about a nickel. But we've made some important acquisitions, the most notable of which is Shockwave, which incurred some financing costs.
J&J's Joseph Walk again. Johnson & Johnson shares, they're up now by 3%. Lots of earnings today after the close of trading. Among those names, United Airlines. Investors will want an update on how the carrier is being affected by stepped-up fare cuts in the domestic industry, especially after rival Delta Airlines acknowledged that discounting led to its third quarter earnings and revenue outlook that fell short of expectations. And those are some of the top company stories at this hour, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. This is where we bring you all the top news in business and finance and economics with our lens of our Bloomberg Intelligence folks that cover 2,000 companies and 130 industries worldwide. We got you covered on everything, particularly when it comes to world and national news. Because for that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, Charlie. On day 3 of the Republican National Convention, Peter Navarro, the top trade advisor during the Trump administration, is on his way to the RNC in Milwaukee after serving a prison sentence for contempt of Congress that ended this morning. Meanwhile, a few months after being the last candidate to drop out of the primary race, Nikki Haley made a last-minute appearance at the convention Tuesday night. Haley brought her support to former President Trump and display of unity in the party.
I'll start by making one thing perfectly clear. Donald Trump has my strong endorsement, period.
Donald Trump's vice presidential pick, Senator J.D. Vance, is expected to give his acceptance speech at the Republican National Convention tonight. In a new Democratic campaign video released this morning, Vice President Kamala Harris says Trump's new running mate will be a rubber stamp for Trump and his extreme agenda.
Unlike Mike Pence, Vance said he would have carried out Trump's plan to overturn the 2020 election.
Vice President Harris says Vance supports a national abortion ban. The Department of Homeland Security's Inspector General says it has opened up an investigation into the U.S. Secret Service's handling of security for Donald Trump on the day a gunman tried to assassinate him at a Pennsylvania rally. President Joe Biden already had directed an independent review of the security at the rally. Britain's King Charles III spoke at the opening day of Parliament in London this morning. King Charles spoke to the House of Commons and House of Lords, mapping out a legislative agenda for the new Labour government under Prime Minister Keir Starmer.
My government will continue to give its full support to Ukraine and its people, and it will endeavour to play a leading role in providing Ukraine with a clear path to NATO membership.
King Charles also says his government recognizes the urgency of the global climate challenge. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, and Charlie.
All right. Thank you so much, Michael Barr. We really appreciate that. So this is a story that Samantha has sent to us twice. So
Yes,
I feel like we need to hit it.
Kind of serious.
She's a little serious about it. She's on a production team. So this is about Taylor Swift.
Of course.
Of course, about inflation in the UK and what it means for the Bank of England Governor, Andrew Bailey, as they inch towards a rate cut. Their next meeting is August 1st. So the UK annual inflation rate came in a little bit higher than forecast in June. The CPI is right around that target level of 2% rather than dipping to 1.9%. Now, let's be real. That doesn't feel like a lot, and it's more than plausible, this piece goes on Bloomberg, that Swift's impact on distorting hotel pricing in certain parts of the UK has made the difference between headlines that would have proclaimed below target inflation versus the ones we got that were inflation hotter than hoped.
And tongue-in-cheek, a little note written to Ms. Swift by the Chancellor. Dear Ms. Swift, I knew you were trouble when you decided to hold the British leg of your record-breaking QE for the People global tour, just as I was hoping that inflation would finally dip below the Bank of England target for the first time in like ages. People tell me you're only transitory, but I just can't shake it off. Beyonce never treated me like this. Yours, Andrew Bailey.
And then it says blank space for signature.
Yes.
So I spot 3 Taylor Swift references in that.
Okay, blank space.
Blank space, shake it off, and trouble.
Okay.
But that's all I got. I'm sure
Okay.
my daughter would find a lot more. So we jest, but not necessarily. I mean, we can't put maybe so much weight on the statistics than they need to be. That hyper focus is it's a narrative distortion, right? You're gonna believe what you think, and then that's it. Confirmation bias. But nonetheless, now that Taylor Swift is winding up her tour, we can be done with the Taylor Swift economic effect.
Very good. And it was a big economic effect for her. That's
and
Yes.
for her roadies and everybody else.
Yep.
All right, that wraps it up for me and Paul. Have a good trading day Wednesday. It's a tough day out there with tech really getting hit. Coming up, Balance of Power with Joe Matthew and Kaylee Lyons. They are live from the Republican National Convention in Milwaukee. They'll have everything on the ground for you right now. This is Bloomberg.
From the Republican National Convention in Milwaukee, Wisconsin, to our TV and radio audiences worldwide, we welcome you to Balance of Power alongside Kaylee Lyons. I'm Joe Matthew. Welcome, Kaylee, to day 3. We just got the rundown on the schedule here, and over the course of the next couple of hours, we're going to be hearing from a lot of voices in Milwaukee, speaking tonight in some cases, or last night, depending on the schedule here. And Kaylee, it looks like a big one for J.D. Vance. This is a night that this whole crowd has been waiting for.
Yep, the vice presidential nominee slated to speak at 9:30 p.m. local time. That's 10:30 p.m. Eastern time on a night in which the theme of the convention for night 3 is Make America Strong once again. Tonight is going to be largely about foreign policy.
Yep.
And listening to J.D. Vance talk about foreign policy will be very interesting for a global audience as we get more on his ideas about Ukraine, China, and other threats the U.S. is facing.
Not a big fan of U.S. support for the war in Ukraine. I suspect that President Zelensky will come up. It'll be interesting following a couple nights of attempted unity to see how the crowd follows along.
Yeah, of course, there'll be other speakers as well. Congressman Matt Gaetz, Anna Paulina Luna, others, including J.D. Vance's wife and former President Trump's son, Don Jr., will all be speaking tonight. So it's going to be a stacked affair here in Milwaukee.
You said it. Let's get started. Bring it right to the matter here with Bloomberg's Tyler Kendall getting us started tonight. Tyler, what are you looking at on day 3?
Yeah, hey, Joe. Well, as you mentioned, tonight's focus is going to be foreign policy. Everybody is going to be watching now Vice Presidential pick J.D. Vance's speech tonight. And it's interesting that it comes on the night when foreign policy is the highlight because he has been one of the staunchest opponents of Ukraine aid in the Senate. Now, I want you to take a listen here. I had the chance to catch up with him back in February when that big supplemental assistance package, which included aid to Ukraine, was stalled in Congress. And he was one of those senators who was saying that we should not pass it. Take a listen to why he was going to do that, what he told me when I actually had the chance to catch up with him in our Bloomberg DC offices.
We're actually sending weapons to Ukraine so fast, it's eliminating our ability to plan for a contingency in East Asia, in the Middle East, or something else that would affect our own national security. So it's good to make more American weapons with American workers and in American factories. It's bad to send them overseas at a faster rate than you're actually building them.
previously called the war in Ukraine unwinnable. Bloomberg News is reporting European officials say Vance's nomination is fueling anxiety that allies will have to do more to keep U.S. assistance to keep flowing, with one Ukrainian official calling the nomination, quote, a very difficult scenario for us. You heard Vance there advocate for replenishing the U.S. defense industrial base before all else. It strikes a similar tone to former President Trump on the issue, promoting more protectionist policies. Now, Joe and Kaylee, as you know, former President Trump, when he was in office, threatened having the U.S. withdraw support from NATO, urging other allies in the alliance to up their defense contributions. J.D. Vance has said similar things as well.
Well, and Tyler, when we think about protectionist policies, often we also think about tariffs. And we know that both J.D. Vance and Donald Trump have had their eye on China in that regard. What should we expect to hear about that this evening?
Right. Well, when you heard Senator Vance referencing replenishing our defense industrial base, he's talking a lot about those rising tensions in the Indo-Pacific and making sure that the U.S. military and our own weapon stockpiles at home are up to the levels that they need to be, particularly as Bloomberg News continues to report on China building up their own military capabilities. Now, shortly after he received the nomination earlier this week, one of the first statements he made was that he feels that China is our, quote, biggest threat that the U.S. is facing.
All right, Bloomberg's Tyler Kendall live with us in Milwaukee today. Thank you so much. And now we're joined here in our studios in Wisconsin by the governor of Mississippi, Tate Reeves. Welcome to Bloomberg TV and Radio, Governor. It's great to have you. As we look ahead to the speakers of this evening, and of course the headliner, the vice presidential nominee, J.D. Vance, what are you hoping that he focuses on? What message do the people of Mississippi want to hear from him?
Well, what I will tell you is I believe that J.D. Vance is the candidate that is most likely to govern like President Trump is going to govern. I also think J.D. Vance is a huge addition to the ticket because J.D. Vance's story speaks to rural voters in places like Mississippi, but also rural voters in Wisconsin, the state that we're in now, and rural voters in Ohio, obviously, but Pennsylvania and Michigan. And we find ourselves at a time in American history where everyday Americans are struggling. They're struggling because of inflation. They're struggling because every time they go to put gas in their car, it costs significantly more today than it did 4 years ago. Every time they go to the grocery store and they buy bread and milk and other essentials, it costs significantly more than it did 4 years ago. And I believe that J.D. Vance's story and what he will tell tonight is going to highlight those facts, that he grew up in a difficult environment. And quite frankly, all of those things are true because of policies enacted by the Biden administration that were intentional. They intentionally increased government spending significantly, which led to higher and higher inflation, and it's hurting people back home.
Well, obviously that spending that came out of COVID followed enormous spending by the Trump administration that added trillions to the debt. And we're talking to economists every day here almost, Governor, who are deeply concerned about a ballooning deficit, maybe trillions more, if the Trump tax cuts are made permanent, which could have an inflationary effect. And this problem you're outlining gets even worse.
Well, what I will tell you is you don't have to be a math major to figure out that if you have $30 trillion in debt and interest rates are rising as they have done, and let's just say 5% of $30 trillion, we're going to spend $1.5 trillion a year as a country just on interest expense without even paying back any of the principal. And so I think that these are issues that maybe are not top of mind for every single voter across America, but it's certainly important to those of us that operate in the states. You know, we have to have a balanced budget in Mississippi. When I came in 20 years ago, we had a nearly 25% shortfall in revenues compared to the expenditures of the previous administration. And what we did is we went and we fixed it. And so I think good, strong policies, a growing economy will lead to more revenues for the government, and we're going to have to get control of spending.
So if we need to get control of spending and everything you just said about how interest rates are higher, it's going to take a lot more just to maintain the high debt levels we have. Why then pursue further tax cuts? Doesn't that not work mathematically?
Well, actually, I will tell you, I believe very strongly that government doesn't have anything that it doesn't first take from someone else. And the reality is that as you look at where we find ourselves, every single American knows better how to spend their money than any governmental entity ever will. Certainly the federal government has proved that, but we have proved it in Mississippi as well. We try to be smart and conservative with the people's money, but we've been cutting income taxes in our state. In fact, there are 9 states in America that have no income tax. Of the 41 that have one, Mississippi has the 5th lowest in America, and our economy is booming. Unlike other parts of the country, Mississippi has the lowest unemployment rate in our state's history right now. Mississippi also has more people working than at any time in our state's history, and that's because we have a tax-friendly environment. We have a business-friendly environment. We showed during COVID that as difficult as those times were, our people got up and went to work and took care of themselves. We need more Americans in the workforce. We need more taxpayers. We need more people pulling the wagon and less people sitting on the wagon.
You're talking about winning over rural voters, and I know that that's very close to your heart for obvious reasons. We talked to Congressman Brian Stile the other day talking about the hunting territory in northern Wisconsin that he's looking at. But we've been told by a lot of smart people that this election will be decided in the suburbs, that it will be women, that it will be young black men. What's the message to them?
Well, I will tell you, President Trump is currently polling better with young African-American men than probably any Republican has ever done.
That's right.
Certainly. And that's because that particular group also recognizes the same thing that every other American recognizes, and that is inflation. The fact that when they go and they put gas in their car, the money that they are earning is going less and less far.
But it's an economic message. We could talk about a lot of issues. You're striking the economy each time.
Well, I think at the end of the day, particularly those who are undecided, I mean, obviously, if you've got the hardcore conservatives on one side and the far left on the other, obviously, there are hot-button issues that those individuals care about. But the ones who are undecided, those in the middle, those that are independents, those are right-leaning Republicans that maybe have not always voted for Trump. I believe it's pocketbook issues. I believe it is economic message that is going to win the day.
Because you said pocketbook issues, I would point to a study that was just done by the Peterson Institute for International Economics that found that the tariffs that both J.D. Vance and Donald Trump have advocated for, a 10% levy universally, 60% on all goods coming out of China, would amount to an annual cost for the average middle-income family of $1,700. Are tariffs the right policy for middle-income people in Mississippi?
Well, what I would tell you is the right policy for America and the right policy for Mississippi is for us to bring those jobs that are in China, particularly those production jobs and those other jobs that are situated throughout Asia, bring them back to America. It's about making America great again. It's about creating jobs for those individuals that we just mentioned that live in rural places. You know, we've got in our state, our message of bringing economic development and better and higher paying jobs to our state is a message that is winning the day. We've announced 3 different projects over a 15-month period of over $2 billion in capital expenditures in companies that are coming back to our that are building in America, building in Mississippi, and creating jobs that are paying 25, 30, 35% above the state average on wages. And that's the message that I think people want to hear is we need to be producing more things in America and less things in China.
Let's pick through a couple of other issues, and I know one that is important to you is abortion. This is something that we've seen addressed in the platform that I'll ask you about, but I want to bring our viewers and listeners back to your conversation. I remember it distinctly in 2022 on Meet the Press. Here's the governor.
What I would say, Chuck, is at the end of the day, there is no right to an abortion in the United States Constitution. That the issue with abortions that makes it very different is that there is a life. There is an American child in that womb, and it's incumbent upon those of us who are elected to stand up for the rights of those individuals that can't stand up for themselves.
Governor Reeves on Meet the Press 2 years ago. Now with this RNC, the platform approved on Monday does not include an abortion ban, a national ban, for the first time in something like 40 years. Is that a disappointment?
Well, I certainly support the opportunity for a national abortion ban. But what I will tell you is for that to ever pass the U.S. Congress, it's going to be an abortion ban at 20 weeks or 22 weeks.
Yeah.
And there are very few abortions, even in states like California and New York, as a percentage that are conducted at that late stage. In our state, and when we filed suit to overturn Roe v. Wade, arguing exactly what I argued on Meet the Press, that the Constitution doesn't guarantee a right to an abortion. Our entire case was these are decisions that ought to be made by individual states. And so, to give you an example, in our state, we enacted a law, which I understand is not politically palatable in some other states, but we enacted a law that has exceptions, but does not allow for the right to abortion in the state of Mississippi. My ultimate goal is to save as many babies' lives as possible. And there are a lot of different ideas as to how to make that happen. But the reality is, just because of our case that went before the United States Supreme Court, there are hundreds of thousands of babies that have been born, that have been saved, that are in American society now. And I will tell you, that's not the end of it. That's not all being pro-life is about, is being anti-abortion. We also in our state have worked very hard to create a culture where we're investing in moms, investing in babies, investing in pregnancy crisis centers to help those who are in need. We've made a call out to our churches, to our congregations, and telling them how important it is that they get involved and engaged. Because I believe very strongly that it's our churches and our charitable organizations can do a far better job helping expectant moms than any governmental entity can. It's just a fact that governmental entities tend to be inefficient, even in states like mine that are focused on this issue.
Well, Mississippi also, and I know you were just talking about some of the economic statistics, you're proud of the unemployment rate, et cetera, consistently has one of the highest child poverty rates in the country. Do you see no relationship there between very restrictive abortion laws and children who, yes, thousands of them perhaps have come into existence because of that law, but their lives may be of poor quality for it?
Well, I can tell you this. I would much rather see a baby that is not killed in the womb or otherwise, that has maybe a challenging upbringing. What we're trying to do is improve education to give every kid an opportunity for success. We have had some real progress being made in our state. But look, our state and virtually every other state, there are very few societal problems that can't be solved by more people having better and higher paying jobs. And that's where our focus is. And we have a laser focus on it in Mississippi.
Well, to put a finer point on it, Mississippi has the highest fetal mortality rate in the nation, highest infant mortality rate, highest preterm birth rate. Black women nearly 3 times more likely to die due to childbirth than white women. Is that the cost of a pro-life policy?
I do not believe it's the cost of a pro-life policy. I think that, as is often the case, there are areas in which we can improve. We are trying to address these issues. We have done certain things. I do not support a Medicaid expansion, yet we have done things like guaranteed Medicaid for any pregnant mom in our state. We just did that during this legislative session. Just this past a year ago, we passed legislation to allow for Medicaid expenditures. It used to, that expectant mom could only get Medicaid up to 2 months after childbirth. We worked very hard with our state health officer, and one of the things that he, in his studies, determined, which was surprising to me, because when I looked at those statistics, I just assumed it was really young people, teenagers, et cetera, that were having these challenges, and that's not at all the case. Most of these terrible outcomes, and they are terrible, they're tragic, but most of these terrible outcomes are actually older females that are having not their first child, but their second child, and typically it's their second child within a 12 to 15 month period. And so because of that, we thought that we would at least try the process of giving those moms that have babies, rather than 2 months of Medicaid post delivery, we're going to give them 12 months of Medicaid to ensure that they continue to go back to their OB, continue to go back to their physician, so that those individual physicians can help coach, can help teach, and can help do the work to try to drive those numbers down.
Governor, we just have a minute left, but given what you said about wanting to bring more babies into the world, if not a national abortion policy at the federal level, what about federal protections for IVF?
Well, look, I support protections for IVF. I am a supporter of that particular policy, and whether it's done at the local level or at the state level or done at the federal level, that'll be a debate that we have upcoming. But I do not believe that we should eliminate that option for potential moms, because again, I believe that we need to protect babies, and we need to love life and get more get more and more policies in place that give kids an opportunity for success long term.
Governor, thank you for spending time with us talking about some pretty serious issues. We appreciate that.
Thank you so much for having me.
Have a great convention.
Thank you.
Yes, indeed. Mississippi Governor Tate Reeves with us in studio in Milwaukee. Coming up on Balance of Power, we'll assemble our political panel. They're back, Rick Davis and Jeannie Shanzano, on day 3 of the convention. Alongside Kaylee Lyons, I'm Joe Matthew. It's next on Balance of Power on Bloomberg TV and radio. This is Balance of Power, live from the Republican National Convention in Milwaukee on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons. It's day 3, Kaylee. This is the big one. J.D. Vance, well, I guess second in line. The big one's tomorrow night, really, with Donald Trump. But this is going to be an important evening here. And some other familiar names on the list. We just got the speaker's rundown.
Yep, Congressman Matt Gaetz, Congresswoman Anna Paulina Luna, some others who, as we talk about this RNC trying to preach more a message of unity, will be interesting to hear from, given
Ronnie Jackson,
the conduct we have seen in the halls of Congress. I wonder what's different, Washington to Milwaukee.
Well, for sure. And Peter Navarro, fresh out of prison,
Yep.
will be speaking this evening, as will Newt Gingrich, the former speaker. This could be more of a red meat kind of night.
Yeah, and of course, I would remind all of our listeners and viewers that the theme of tonight is Make America Strong once again. This is going to focus heavily on foreign policy and also the military, which is notable considering that Senator J.D. Vance, the vice presidential nominee, was a Marine.
That's right. Let's assemble our panel for their take on all this. Rick Davis, Stone Court Capital partner, Jeannie Shanzano, Iona University, Bloomberg Politics contributors. Great to have you both at the table here on day 3. I'd like to hear from both of you just quickly on the conversation we just had with Governor Tate Reeves, because it is noteworthy that the Republican platform that was approved at this convention, as I mentioned to him, does not include a national abortion ban. Where does he fall in line with the MAGA side of the Republican Party?
You know, he's taking this line that, you know, what we do in Mississippi may not work for people across the country, but it's where we want to be. The problem is for Republicans on this issue, they are well out of step with the vast majority of Americans in saying leave this to the states, because the states, many of them, are restricting the right to choose. And now you have a nominee as a VP who doesn't even want exceptions in the case of rape and incest. And, you know, you think about the commercials we have heard, and more than that, the really impactful statements from victims of rape and incest who have talked about what has been their sort of plight in life as a result of being raped or having been molested by a family member and become impregnated. To not be given that option to do what they and their family members and their doctors think is best, that is a horrifying reality for women and men across the country. So I think that's where the governor finds himself, and many Republicans today. They don't want to put that out on the platform, but that's what Democrats need to be talking about.
Well, and especially so in these states that aren't like bright red Mississippi. States like the one we're in now, Wisconsin, Michigan, Pennsylvania, the swing states that we know are going to decide the outcome of this election. Is abortion a losing issue for Republicans in those places?
Yeah, it's a challenge. But I think one of the things that the Supreme Court decision on Dobbs did, unleashing this debate at a state-by-state level, and we heard a little bit from the governor of Mississippi, is that it kind of disperses the talking point, right? States are going to choose for themselves what laws they're going to have passed. And, you know, when you look at a political strategy, it's like either make something so small, late-term abortions, you got to be against that. Everybody's against a late-term abortion. Or make it so big you can't get a handle on it. And that's where we are with abortion today. Every state's got a different talking point. And so the battle in Wisconsin will be focused on what Wisconsin voters want. It won't be overlaying a national law that bans abortion, which would have been orthodoxy in any other convention in the last, 50 years.
How about that? So does Senator Vance, there have been a lot of questions about his take on exceptions. Does he need to be clear about his position on this tonight when he speaks to the RNC?
I don't think you'll address this. This is a red meat night, as you pointed out earlier. This is where we rough it up a little bit on, Wednesday night. It's always the sort of case against the Democrats. And abortion is not one of the issues that this campaign is going to be waged on. Usually it's fought out in the platform committee on an internal Republican basis. But with the full embrace of MAGA into the Republican Party, centered around the cult of personality of Donald Trump, we don't have those fights anymore, right? That's a different party now than what we saw in the past. So I think you're going to hear orthodoxy tonight, MAGA orthodoxy. It's going to be about the border. It's going to be about foreign policy, national security. We've seen head nods by J.D. Vance and Donald Trump on what to do about China, what to do about Russia. So I think you'll get more stability around those issues, core Republican talking points against Democrats than anything else.
Well, as you speak about Russia, it reminds me that we can't anticipate exactly what people will say tonight. We do know what people said last night, though, including Nikki Haley, who was just extended an invitation to this convention days ago. She spoke. She said that Donald Trump has her strong endorsement. To quote her, "For the sake of our nation, we have to go with Donald Trump." And Jeannie, she specifically spoke to the people who voted for her. She said the targeted message to them is simple. You don't have to agree with Trump 100% of the time to vote for him. Did she surprise you last night with just how strong that endorsement was?
She did not. You know, it was runners' night up last night, and they were out in full force. I'm not surprised if she was going to say anything different. I suspect she wouldn't have said anything at all. But it's so important to look at what was said last night, because you know what I heard on a night when they were talking about crime and safety? They were blaming immigrants in this country for crime. So not only are we days after a shooting where they said they were going to talk about unity, and they came out blaming immigrants for crime spikes. So the idea that they were going to change rhetoric, that has all but disappeared. But then let's look at the data. Violent crime in this country is down. Immigrants, 30% less likely to commit a crime in this country than people who live here. So from any stretch of the imagination that you look at this, the argument that they were making was offensive to those of us who are, many of us who have friends and family who are immigrants, and to the facts on the ground, which don't support this idea that immigrants are responsible for fentanyl, overdoses, and violent crime in this country. So, you know, I wish Nikki Haley coming out, sure, endorse Donald Trump, but why doesn't one of you state the facts of the situation on safety and crime in this country, and stop connecting it to people you're describing in Ted Cruz, rapists, murderers, borrowing Donald Trump's language from 2016. It was offensive to listen to. A good political show for sure, but not at all in line with the facts or anything a moral person should be thinking about.
Okay, well, let's get a taste of what you're describing here, Kayleigh, from last night. We heard from not only Nikki Haley, but also Senator Marco Rubio. Let's listen.
Donald Trump has my strong endorsement, period.
When President Trump was in the White House, Americans had more money and lower prices. Our borders were secure and our laws were enforced. Iran was broke, the Taliban stopped killing Americans, and Putin didn't invade anyone.
So, unity around Donald Trump. But how about everybody else, Rick? We were talking coming out of a very scary weekend for America about the unity that would wash over this convention, and we've heard that word from everyone who's come in here from the RNC. Is it happening?
Yeah, I think it's a false premise. I mean, we've had 2 days. We can judge from now as to whether or not the talking points that after the shooting on Saturday, the convention was going to focus on unity and try and bring the country together with this cataclysmic event. And really no evidence of that other than the talking points that the organizers of the convention put out. So, yeah, this is business as usual. I mean, what you heard last night was attacks on Democrats, attacks on constituencies, you know, like what Jeannie was saying. So, yeah, I mean, this is actually looking like a pretty straightforward Republican convention, could have been nominating anybody. I think they've just missed the whole opportunity to use this assassination attempt on Saturday to galvanize America around a Trump candidacy. And I think it's kind of, at this point, other than maybe tomorrow night when Donald Trump speaks, they've missed the opportunity.
Wow.
Interesting to hear you say that. We spoke with the RNC co-chair Lara Trump here in studio yesterday, who said that this convention was going kind of as she planned. She still expected they would fundraise significantly off of this, expected to see a bump in the polls in the aftermath. We also asked her, though, what the RNC would do if it turns out Joe Biden is not the Democratic nominee. And she said, oh, nothing changes. I don't believe that there's any polling that suggests another Democrat could beat Donald Trump. There is, though, polling that suggests that other Democrats could beat Donald Trump, or at least are performing significantly better than Biden in battleground states. It was published in Politico this morning, a memo from Blue Labs. Is this the kind of data, Jeannie, that might change President Biden's mind?
You know, President Biden saying it would take an act of God, I guess, to speak to him, to step down. And later he talked about data. It seems that it's hard to reach him with data. They may need to mail drop it into the White House at this point. But to your point, Kayleigh, the numbers are there. They are all over the place, and they're clear. There are other people performing better. And you've got House Democrats now circling and saying this is going to be devastating, not just for the top of the ticket, but potentially we would lose the Senate and we won't be able to pick up these, you know, mere 5 seats in the House. We need to take this thing. So I hope President Biden recognizes what many Democrats do. This is not a coronation. This is a party. And he needs to battle for this nomination. Should they do this early, I think Chicago will be maybe the Chicago of 68. I hope not. But Democrats are going to be furious on the ground. It's not a coronation.
Well, I'll tell you, some of the numbers in this Blue Labs analytics memo point to alternatives, right? We see Arizona Senator Mark Kelly, Maryland Governor Wes Moore, Pennsylvania Governor Josh Shapiro, Michigan Governor Gretchen Whitmer, all outpacing Joe Biden by roughly 5 points across battleground states, and they're doing better than Kamala Harris, Rick. This is bringing us back to the conversation that we had with you the night of the debate. You say, clean slate, new ticket.
Yeah, I thought the debate was disqualifying for Joe Biden. I mean, people can't unsee that. 50 million people watched it. Hundreds of millions saw the aftermath, and we haven't stopped talking about it. It's one of those things that frankly just doesn't happen in a presidential campaign. When you nominate someone, you have to know they're equipped to take the fight, you know, to the opposition, and he couldn't do it. And why should anybody believe he can in the future? The effort to try and fix the problem has resulted in Joe Biden willing to do some interviews, which have been disastrous. They haven't fixed the problem, they made it worse. And so why do they think that's going to work? Now they're going to take him to Delaware and put him back in his basement like he campaigned from in 2020, and maybe that's the plan. Just don't let anybody talk to him. The Democrats have a fundamental problem. They have a nominee that can't win. They believe that. 7 in 10 in the most recent AP poll said that Joe Biden can't win, and they're not going to support him. How do you build a winning coalition with that kind of situation? So, yeah, I think that it's not too late. Crazy things happen in September, and so we'll see where the Democrats go. But every day they demur, every day the debate continues on, they're missing an opportunity to take the fight to Donald Trump. And right now, Donald Trump's having a heyday. So I don't think you're going to hear anything other than calls to keep Joe Biden in this campaign. He's the rightful heir of the Democratic nomination. And I think that's very smart. In fact, I think I would have suggested they don't just lay off arguing about Joe Biden in this convention. Let him have a free night, and because he's the best thing Donald Trump has going into election night.
Well, if we consider what the Democrats are doing, a new memo that came from the convention, the DNC's Rules Committee, in a letter to delegates today, talked about how the party is going to undertake a virtual roll call. There was talk of this happening on July 21st, next week. It will not happen until at least August, they say, Jeannie, probably in part response to all the backlash from the rumors about July. But is this the party that looks like it's just trying to get this locked up before any more Democrats can come out against Biden?
It does, and thank goodness they moved it. Yesterday we were talking 6 days, now they've moved it a little bit, but it is not enough. The numbers show, if that's Joe Biden wants to see, they show he cannot, to Rick's point, continue down this lane. He had a disastrous debate. That debate was followed by an attempt to resurrect the campaign. The Lester Holt interview, you know, thank goodness it wasn't viewed as much, but it was not a good showing. He is not to be the nominee at the top of this ticket. I suspect that he won't be by the time the convention occurs. But if they nominate him or appoint him or anoint him is probably the right word in August now, virtually, that is going to send the wrong signal. And all of the people that you mentioned, from Mark Kelly to Gretchen Whitmer to Josh Shapiro, Andy Beshear, there's a really strong Democratic bench, a lot of energetic young people who have positive numbers to show. Use them, and Joe Biden can help guide them from his, point as president, not running again for re-election.
All right, Jeannie Shanzano and Rick Davis, our Bloomberg Politics contributors, thank you both. We will see you later on the program. But first, we want to head up to New York as we broadcast live from here in Milwaukee and check on what's happening in financial markets today. Bloomberg's Abigail Doolittle is joining us with the latest. Hey, Abigail.
Hey, Kelly. Well, we have lots of red on the screen, but interestingly, it would not be accurate to say that markets are down. Markets are actually mixed. And I say this because the Dow Jones Industrial Average, that bricks and mortar equal weighted index, it is up about 0.5%. In fact, up for a 6th day in a row, while the S&P 500 down more than 1%, the worst day since late April, and the NASDAQ 100 down closer to 3%, its worst day of the year. This market action today has everything to do with the intersection between business and politics, because driving it has to do with the people in the White House and the people who want to be in the White House. Let me take you through the laggards first, because this is everything about big tech. A few things going on here. The Biden administration, first of all, saying that they're considering a greater crackdown on China chips. You then also have the former president, Donald Trump, telling Business Week in an interview that he is not so favorable toward Taiwan's positioning around chips. And then third, yesterday we were talking about the idea of advanced trade. JD Vance negative toward big tech, talking about a possible crackdown on big tech. So we see the likes of Apple, Microsoft, NVIDIA, and Broadcom down in big ways, down between about 2% and 7%. That's really incredible. Again, the worst day of the year. On the other hand, if we check in on the Trump trade, the best way we can see it, Berkshire Hathaway, really old school economy, also one of the most taxed companies in the world. So if taxes were to come down to that 15% rate that the former president is talking about, certainly would benefit. But we have United Health higher. We also have ExxonMobil higher. And then interestingly, Global Foundries, they have 2 chip plants right here in the U.S. That stock having its best day in the year. When we put this together, Joe, we see the rotation we were talking about yesterday, and that is essentially out of growth into value. Over the last 2 weeks, we have value up about 5%. We have growth down about 5%. So it's really interesting that when you put together the Trump trade and the Vance trade, this is what happens. But it is also important to note that the big tech trade, that's a huge weighting to all of these indexes. So if this kind of decline continues, it could really weigh on the market. We'll be watching very closely.
Bloomberg's Abigail Doolittle taking care of the markets for us today. We'll check back with Abigail a bit later, as always, as we turn our attention back to the Republican National Convention underway right now in Milwaukee, where Kaylee and I are live alongside Morgan Ortagus, founder of Polaris National Security, former State Department spokesperson during the Trump administration. Lovely to see you at the table.
Thank you.
Hope the convention's going well for you, and it's great that you're here today because this is Geopolitics Day, international and national security as a theme at this convention. We're going to hear from JD Vance tonight.
Yeah.
Who doesn't love the direction that the United States has gone in with Ukraine, for instance? What are we going to learn in that speech?
So it's interesting that it is Foreign Policy National Security Day, which is what I've done for the past 20 years. That never happens at a Republican convention, right? Foreign policy is never the theme of an entire day.
How about that?
And I think from a Republican perspective, it just goes to show how wrong things are going around the world. We think, obviously in August of 2021, we saw 13 of our best young men and women killed in that disastrous withdrawal from Afghanistan. We, of course, in the Trump administration, I was a part of the Abraham Accords team. We handed 4 historic peace deals over. Then you have Afghanistan fall. Then, of course, you have Russia, Putin invade Ukraine. And then last year on October 7th, we saw the horrific murders from Hamas invading Israel. And I'm sure we will get reminded tonight, 10 months later, we still have 5 Americans that are held hostage by a terror regime. Not only do you have the President of the United States with an attempted, former President of the United States with an attempted assassination over the weekend, as I've been saying for years, this isn't new news. The Iranian regime has active plots on U.S. soil against former President Trump, against my former boss, Mike Pompeo, Brian Hook, and other senior administration officials. It's unprecedented that an enemy state of the United States would have these many plots against officials where they require, for the past 3.5 years, 24/7 security. Never happened in U.S. history. And then, of course, you're worried about what's happening with China around the world. And I think that Americans are very concerned. They're not only concerned about what's happening at the grocery store, but they're concerned because there feels like there is a chaotic world out there and that nobody is really in control.
Well, so let's pick a few parts of the chaos, shall we? You mentioned, for example, the war in Ukraine, which we know that JD Vance is not an advocate for continuing to fund in the U.S. He thinks some kind of negotiated peace is the most realistic outcome. Former President Trump, of course, has said he could end that war in 1 day. Do you actually believe that? What would a Trump-Vance ticket, president and vice president, ultimately mean for a resolution to that war?
So J.D. Vance is a good friend of mine. I think he's a great pick, but it is the president of the United States, if Trump is reelected, who sets the foreign policy, and he does that with the Secretary of State. And so the foreign policy will be up to the president. Having served in the last 2 years of his administration, and by the way, I've served in 4 administrations, Republicans and Democrats, so I've got a lot of background here. In the last administration, for the last 2 years, we actually provided lethal weapons to the Ukrainians. Ukrainians. We had more sanctions and more actions against Russia than any president in modern history since the Cold War, since Reagan. And so when you look, not only were we providing lethal weapons to Ukraine, we were renegotiating New START, we were sanctioning Nord Stream 2. This is an energy discussion that I know you guys have had on Bloomberg. Why does that matter? Because it's not like we're pontificating about what foreign policy would be. We know that we actually took a very strong stance against Russia and supportive of Ukraine in the last administration. Unfortunately, there's a series of probably 10 to 20 different deterrence failures from the Biden administration that led to where we are today. I'm one of those Republicans who are incredibly critical of the delay of weapons over the past 2 years. And listen, if you look at it from an economic perspective, you know, we have, the truth is that the Russian economy is doing better than it was before the invasion. The initial sanctions tranche, and I spent years of my life at the Treasury as an analyst doing sanctions, the initial sanctions tranche that the Biden administration did with the Europeans was fantastic, but it was never followed up on secondary sanctions. We never took Russian banks off the market. We never prevented them from exporting oil and energy or from their minerals and mining. And so, you know, even our LNG export ban in January, for example, we've seen billions of dollars, $21 billion just in 2022, that Russia gained from their LNG exports that they were able to use to fund their war machine. So the sad reality is they actually have figured out how to circumvent our sanctions, and they have this what I call supply chain of terror between Russia, Tehran, North Korea, and China, where they are able to resupply themselves from a munitions perspective with drones, ballistic hardware. They're actually resupplying themselves faster from a munitions perspective than the West can, and that's, I think, should be incredibly concerning to all of us.
Well, it's interesting. I don't know if you're implying that a Trump 2.0 would pursue secondary sanctions, because we've asked a lot of lawmakers about this. You would push for it. Okay. Well, that's really interesting, because Donald Trump says he can end this war on day one, that it's a phone call, this thing is over. You don't need secondary sanctions in a world like that. You've been in this game for a long time. Do you take a commander-in-chief seriously talking like that?
Yeah, I mean, listen, I think he has there's no doubt, if you look at it from a policy perspective and not a rhetoric perspective, we were much tougher on Russia than the Biden administration.
But how do you end a war in one afternoon?
Well, I mean, listen, we don't know if Trump is elected. We have no clue what we will inherit in January of 2025. So who knows what you're going to get there. So you'll have to deal with the situation there. Obviously, he's going to have a tough negotiation. So you ask yourselves, the people now who are negotiating to get 5 Americans out 10 months later from a terrorist group. They can't get these Americans out. They can't finish a negotiation between Israel and Hamas. These are the people that you think will be better negotiators than we are. When we negotiated the Abraham Accords, sorry, I know the negotiators. I was a part of the team. I'd bet on the Trump negotiating team every day of the week.
Who are you betting on will be Secretary of State as part of that team?
I think that he has a ton of people to choose from. I don't know if these people are interested, but I will just tell you what I think. I think Rubio is incredibly impressive. Bill Hagerty, my senator, listen, I'm biased. I'm from Tennessee. He's my senator. Rick Grinnell has a very close relationship. Tom Cotton is another senator who's been in the foreign policy side for a long time. So I wouldn't be surprised if the president picks an ally from the Senate.
All right, Morgan, it was great to have you here in Milwaukee.
Thanks.
Appreciate your time. Former State Department spokesperson Morgan Ortagus. We appreciate it. Now, we talked a lot about the war in Ukraine, but there also is a great focus on China at this convention, especially with the selection of J.D. Vance as the vice presidential nominee. And that is something we spoke about with Alabama Senator Katie Britt yesterday as well. And this idea that both of these, both Trump and Vance, are protectionists. They are advocates for tariffs, and that does come at an economic cost. It could be inflationary, though what you're hearing Republicans say is it's too important that they make sure that American business is protected from China. So let's take a quick listen to what Senator Britt had to tell.
We know that places like China, people like the Chinese Communist Party, have undercut the American worker at every turn. So whether it is Alabama shrimpers or steel manufacturers, whether it is stealing our intellectual property, what they're doing, essentially stealing American wages and opportunity, is real. And so we've seen this in the last Trump administration. I mean, looked at our agriculture industry as they allowed President Trump to work to create a fair playing field for them. And so I am excited to actually take policies then drive them down to like, how do they affect America? How do they affect opportunity here? Making sure that we're putting Americans, American manufacturing, American capability at the forefront of every conversation. Because look, when you go back to COVID, if we learn nothing else, it's that we need to secure our supply chains. And part of that comes from making sure that we're strategic and that we're intentional. And I think you'll see that with JD, and you'll see that obviously with President Trump.
And we want to continue this conversation on China now. We're joined by a member of the House China Select Committee, Congressman Carlos Jimenez of Florida, who's here with us in our studios in Milwaukee on Bloomberg TV and radio. Congressman, thank you so much for your time. We talk a lot about China because J.D. Vance, just earlier this week, after it was announced that he was the vice presidential pick, said that it is the #1 threat the U.S. faces.
Yes, it is. For now and the foreseeable future, China is the #1 threat that we face.
And how do you expect a Trump-Vance administration would address that? Is this purely tariffs or is it something else?
No, it's, look, China has made no secrets that it wants to be the #1 economic power in the world. It wants to be the #1 military power in the world. They're now allying themselves with Russia, North Korea, Iran to create a new world order. And the new world order doesn't include the United States of America. So that is the #1 threat. It's a very brutal communist dictatorship. It oppresses its own people. It's accused of genocide. It uses slave labor. And I've been saying for a long time that we need to start to decouple from China as soon as we can. Much of our supply chain comes from China. We've become way too dependent on China. We need to bring back manufacturing to the United States, especially manufacturing that deals with our security, our defense industries. Yeah, we're lacking. Look, in World War II, during World War II, for every carrier that Japan built, we built 6. And so we outproduced Japan. Right now, China holds an edge of 232-1 in shipyards. That's just one example of why China is to me, the biggest threat that we face, not only us, but the world faces, and now in the foreseeable future.
You talk about decoupling, Congressman. There's a Bloomberg report out today that has led to some pretty tough moves on Wall Street. We're watching semiconductor stocks fall sharply, and we've been through this before with trying to keep NVIDIA chips, for instance, away from China. But this report now suggests the Biden administration is considering using the most severe trade restrictions available if companies keep giving China access to these advanced chips. Would Donald Trump do the same thing?
I think he would. I think that he understands the threat that China poses. They frankly stole much of the stuff they're selling to us right now. They stole from us. All right, we invented the chips. Now their threat to Taiwan. Taiwan controls 80% of the chips, right? And so if China were actually to invade Taiwan and actually then control Taiwan, they would control 90% of the chips in the entire world, which is kind of like what they do in everything they do. And so they subsidize an industry, they target an industry, subsidize it. Then they flood the market, the world market, with that product. They drive all the competition out of business, and then they become the sole source, right? That's a pretty good way to run your business, but it's not a way to be a good partner in the world stage. And so I wasn't like this before. I thought maybe you open up China and trade, et cetera, and then they'll find that democracy is the right way. But they've gone the other way.
When did you change?
I changed when I went to China. I went to China when I was the mayor of Miami-Dade County, thinking that, well, maybe we can get some Chinese transportation assets for Miami-Dade County, et cetera. Okay, maybe they can invest in Miami-Dade County. And when I walked out, I said, I want nothing to do with them. Zero. Why? Because every time that I was dealing with supposedly a company, all right, I was dealing with the executives of the company. There was always a couple of people right over there, okay? How
about that?
That whenever I asked them a question, they would always look to those people over there. That was the Chinese Communist Party.
PRC.
The PRC. And the CCP was there, okay? And so, yeah, I said, well, no, not really. And then I didn't see the sun for about 2 weeks when I was there because of all the coal they were burning. And so here they are, a champion supposedly of green energy and part of the Paris Climate Accord, and yet they are polluting. They're the world's biggest polluter by far. So no, I didn't like the way they did business. I didn't trust them. And so I came away completely different opinion than when I walked into China. So that was very beneficial to me. And you know what? President Trump was right. Senator Marco Rubio, who I'm pretty good friends with, he was right. Yep, they're the biggest threat that we have.
Well, you bring up Senator Rubio, another Florida man, obviously, who was not selected for the vice presidential pick. But Florida is an interesting case study, as there has been suggestions, given abortion, for example, that it may be a state in which Democrats could more easily play this cycle. I'm sure you probably don't actually believe that. But we are seeing interesting demographic shifts, even if it's not an entire state being up for grabs.
Yeah.
Latino voters going over to Donald Trump. Same with black voters. And what do you assign that to? Why is that happening?
Ronald Reagan once said back in, I think back in the 80s, or maybe in the 80s, when he was president, that Latinos, Hispanics, or Republicans, they just don't know yet. They're starting to figure it out. We hold the same values. We have family values. We're people of faith. We believe in hard work. We believe in the American dream. And we are Americans. We want the same thing everybody else does, So, yeah, they're coming over.